peaceful, very peaceful. I left the morning that I was supposed to leave. I went to Florida, and you had a very peaceful transfer. This was not and I'll tell you what, those people that did go down, which was a tiny fraction of the people that went to Washington. I mean, you're talking about a very, very small, because there are hundreds of thousands of people, and I don't know what you had, 500, 600, 700 people go down to the Capitol. But those people, that was not one of those people had a gun. Nobody was killed except for Ashley Babbitt. She was killed. She was killed. She was shot in the head by a policeman what he did was horrible.
President Trump, maybe let's...
So I think we should be allowed to disagree on that. And obviously, you see by the reaction in this room,
let's return to one other big subject that you bring up repeatedly, immigration.
Yeah.
I know it's a very emotive issue for you, but just from the point of view of business people here, you look at the full effect of taking a lot of people out of the workforce, removing a lot of people. The Congressional Budget Office is banking on the fact that there'll be $9 trillion added to the GDP of America over the next 10 years by immigrants. You want to stop that process. For all the people who run businesses in the audience, I'm just focusing on the economic thing. Are you prepared to say, look, it's fine to have a slightly smaller economy in exchange for having the immigration controls you want?
Simple answer. I want a lot of people to come into our country, but I want them to come in legally. I don't want to have...
But that means you will have to deport. You know, you are talking about deporting 11 million people. That is a lot of people to take out.
It came out last week that 425,000 people are horrible criminals at the highest level. But it came out that 13,099 were let in during their administration. They tried to say longer, wrong. Over the last 3.5 years, 13,000 plus people came in, murderers. They're in jail for murder. Some were having the death penalty. They were all released into our country. 13,099 people were released into our country. We had drug dealers released. We had street gangs released. Look at what's happening in Aurora. But now I don't have to go with Aurora anymore. Look at what happened last night in Times Square, where rough migrants from all over the place. You know, it's not just South America. We have people coming in from the Congo, large numbers from the Congo and Africa. They came in, as of last night, I was speaking to Tom Homan, 180 countries, people came in. They came from prisons and jails. They came from mental institutions and insane asylums, a step above. They came from the terrorists. We had large numbers of terrorists come in. When I was president, we had the strongest border in the history of a country. I built hundreds of miles of wall, and walls work, by the way, hundreds of miles. We had the best numbers we've ever had. Now we have the worst numbers, and here's the problem. We have some of the worst criminals in the world coming in. Now, Venezuela, their crime has gone down at levels that nobody's ever seen before, because they've taken their street gangs and their drug dealers and they've emptied their prisons, not fully because they can't get enough buses. They've emptied their prisons. They load up the buses and they drive them into the United States, and they're dropping their prisoners into our country. Their crime is down. Their numbers are crazy how low it's dropped. I heard 72, 74%. They've taken their gangs. They've taken their criminals off the street. They've taken their people out of mental institutions, which cost them a fortune, and they've taken them and dropped them into the United States of America. Those people have to be returned. We can't live with thousands of murderers and not...
The issue I asked you about was the idea that if you reduce immigration, every economist will tell you, if you have fewer people, there is a smaller economy.
I like immigration, but they've got to come in legally.
Okay. Well, let's finish on two.
No, I want to make sure. Look, I don't want to have people that have killed 9 people and they're, you know, a sadistic, crazy nut job. We have to have people that can love our country, that can, that will obey the laws, everything else. You have hundreds of thousands of criminals being dropped in. And Venezuela is one country. Look at what they have done, though, in Aurora. They've taken over apartment complexes. They've gone into the real estate business. See, they're like us, except they've done it with MK, whatever the hell they're called, right? I mean, they have weapons that are so sophisticated our military doesn't have them. They've taken over parts of cities. In Colorado, you have a place called beautiful Aurora. Take a look at what's happened to Springfield, Ohio, where they dropped 30,000 people into a community of 50,000 people, and it's total bedlam. The hospitals can't be used anymore by the residents. The schools can't be used by the children that were there last year because other people that don't even speak the language.
The issue I asked you about, many companies here have a shortage of labor.
Yeah, that's good. We'll take care of that. We're going to get people in here rapidly, and they're going to be people that want to be in here, and they're going to be people that can love our country and won't kill people because they don't like the way they look. Some of these killers are among the most evil killers. They will look at you down, the beautiful woman there, they'll look at you and they will kill you. These are seriously sick people. And no, I don't want them in our country. And they are in our country right now. And they're in there because Kamala Harris, who's our border czar, is an incompetent person.
President Trump, for the record, as you know, the crime rate is lower. Can I finish with two questions? The first, you just said it, you don't do old. You own and run businesses. Yeah. Would you appoint a CEO who was 78? And you didn't give you a medical?
Yeah, I would. Depends on this. I've met people like Biden, who's in bad shape. I wouldn't appoint him. He's 81 or 82. He's 4 years older. But I'd appoint, I know some of the smartest people I know. I know a man that made all of his money from the time he was 80 to 90, and he was a failure all his life. He was in the drinks business.
Strangely, you didn't bring this up but you were running against Joe Biden.
No, I never attacked him for his age. In fact, I used to defend him on his age. I attacked him for his lack of competence.
I've asked you all these questions.
By the way, because I think it's important, and I know you do too. I know so many people in their 80s that are among. Bernie Marcus is 95, he founder of Home Depot. You have the conversation with him. He's just as sharp as he mentally. He's just as sharp as he ever was. He's 95. I can tell you that in their 90s, I don't want to get into the 90s stuff, but you know what? I know many people in their 80s. I know guys in their 80s that won't leave the company, like family companies where they don't want the kids to take over, because they're much more competent than their kids. I know them both, right? So, no, I would have no problem. And you do have another factor. You know, we've had some of our great...
On the Supreme Court, you just said you don't do old.
Some of our great world leaders are in the 80s. And if you look throughout history, some of our greatest world leaders were in their 80s. No, that would bother me. But... you know, I took 2 cognitive tests, and I aced them both. I think that, frankly, people, regardless, should take, if they're 50 or 40, I think people should take cognitive tests, not because of the age, but because of something else. Now, here's the problem. They say it's unconstitutional, okay? But I would love to see cognitive tests. I don't think she could pass a cognitive test. I mean, I've watched. I don't think she could pass a cognitive test.
President Trump, you've gone over many issues on this. I asked you many questions about things. One thing I haven't asked at all about is the state of the race.
Yeah.
And I had a question for you. On election night, which state would you look at first? Which state do you think this race is going to be decided by?
So they say Pennsylvania, I would say most. I think we're doing very well there. I think you look at Michigan, too, and I'm doing very well there. You know, we don't have to look necessarily. The votes are starting to come in now. So you look at polls, but you can also look at the votes that are being cast right now. People get a pretty good indication. And based, as we discussed backstage, you know, based on the votes that are coming in so far, we're doing very well. I mean, we're way up in Pennsylvania. We're way up in Michigan. We're doing very well in Arizona. I saw Arizona. In fact, somebody said they're going to pull the plug in Arizona. They're going to give it up. because it looks like we're quite a ways ahead. I think we're doing well. Look, this is a party, the Republican Party, of common sense. Forget about conservative, liberal. We're, let's say conservative, but we're really a party of, we need borders, we need fair elections, we don't want men playing in women's sports, we don't want transgender operations without parental consent. You know, there's so many things, but it's 99.9% is common sense. It really is common sense. And I like to say it. I don't know if anyone said it in the past, but I say we're really a party of common sense, and we want to have great people in our country. I want to have a lot of people come in so that you have your choice and so that they have choice. I want to, you know, I have a good heart. I have a heart where I want people to be taken care of, but I don't want to take in people where millions of people, 21 million people at least, have come in the last 3.5 years, unvetted, unchecked. We don't know anything about them. How about this? Gavin Newsom, he's the governor of California.
Newsom.
He signed Newsom, I call him.
Yeah. But do you think...
No, he corrected me. He corrected me. I said, that's the first time I've been corrected.
There are CEOs out here, if they said those sort of things about a rival CEO, they'd be sacked. Do you think it's fine for a president?
But they don't have to survive like me. They don't have to go through what I have to go through. There has never been a president that's been treated like me, so I have to fight my own way.
Well, you made a very good job of...
He signed a bill in California 2 days ago that you don't even have the right to ask a person for voter ID. And if you ask a person for voter ID, of course you have to show voter ID. The only reason you wouldn't do, because they want to cheat. The bill says you cannot, it's against the law for you to ask a person, may I please see your voter ID when he votes? What is our country coming to?
Well, you've given us a tour d'horizon of where that country might be going to. Thank you very much, President Trump.
Thank you very much. Appreciate it.
Thank you very much for the conversation.
More than an hour-long conversation between former President Donald Trump and Bloomberg editor-in-chief John Micklethwait in partnership with the Economic Club of Chicago, a conversation that ranges from tax and tariffs and technology to immigration and the Federal Reserve. Welcome back to special coverage, a special edition of Balance of Power here on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew. We are about to break down exactly what we heard there from Donald Trump in terms of his economic policy, including the pushback he gave on what a number of economists, or majority of economists, would suggest are potential inflationary and detrimental impacts of the policy, pushing back on the idea, Joe, that tax cuts will add to the deficit, that tariffs will lead to higher costs for the American people, even that it could influence ultimately the dominance of the dollar as the world's reserve currency. We should point out a lot of those things were fact-checked in real time by John Micklethwait.
Yeah, we have a lot to unpack here, and that was quite an exchange. Sometimes interviews take different forms with Donald Trump. That was a real back and forth, and I think we all learned a lot by listening to it. John started by citing his very first question, research from the Committee for a Responsible Federal Budget, that if you wonk out with us here on a daily basis on Balance of Power, you're pretty familiar with. $7.8 to $15, I believe, trillion was the estimate, that unless there's something we're not understanding about how to pay for the tax cuts and exemptions that Donald Trump has put forth, that is what it would add to the deficit. Donald Trump wasn't having any of that, Kaylee, and that's nothing new in this case.
Yeah, continually pushing back on, again, what the majority of economists would agree would be the economic impact of his policies. So we want to turn now to an economist. Bloomberg Economics' Anna Wong, who leads our U.S. economic coverage, is here with us in our Washington, D.C. studio. So, Anna, you, of course, have done analysis on what the policies of not just Donald Trump, but Kamala Harris could mean for the U.S. economy. When he says things like we're all about growth, that companies will only be protected by stronger tariffs, is that really how it's going to translate economically if these things become reality?
Yeah, so I think he simplified his own policy impact a little bit. So if we looked at his tax policies, which is all about tax cuts, lowering corporate tax cuts, of course, those would be all economic models would say generally in the short term it would boost growth. That would be where the growth enhancing would come from. But there's a cost to be paid for that, and which is that over the long term with higher fiscal debt to GDP ratio that would raise interest rates. And in 10 years, those benefits, which you see in the first 2 or 3 years, would dissipate. Also, in terms of tariff policy, he mentioned a lot about how tariffs would bring back jobs to the country, and that's pro-growth. So I think it's important to know that it's true. Economists were wrong in his first administration, that all the inflationary impact was economists estimated were overblown. But, you know, the economy adjusts to tariff in 2 ways, either through higher prices, if firms can pass through those prices, or through lower investment and lower growth. And in his first administration, what happened was it didn't translate into higher prices. However, it did translate into lower growth due to trade policy uncertainty.
We've had conversations on this program, in fact, quite recently. Today, Joe Livornia was on. Before that interview, Scott Bessent was on a couple of days ago. They returned to the theme of looking at this as a whole, that each proposal taken in a vacuum is not going to add up to what the former president is seeing here. When you actually do that, when you combine the tariffs with the tax proposals and drill baby drill, his idea of lowering energy costs to lower inflation across the board, do you see it any differently?
Yeah, I think that if you take it holistically, and Joe Livornia is completely right, you have growth-enhancing tax policy in the short term, but growth-reducing trade policy in the short term. I think in the first 2 or 3 years, that will about wash out. The effect will be slightly negative over a 10 years period.
Anna, thank you so much for being with us. Bloomberg Economics' Anna Wong, keeping us honest on some of the issues that we talked about here. And I want to turn from the economy to politics. Of course, it's pretty hard to remove the two, so we'll do both with our signature panel. Rick Davis, partner at Stone Court Capital, alongside Jeannie Shanzano, political science professor at Iona University, senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, you said this was going to be a spirited conversation, that this might be the most challenging interview that Donald Trump would have for the rest of the cycle. I think you might be right.
Yeah, and I think one of the more sober and serious conversations. I thought John Micklethwait did a fantastic job of keeping focus on the issues that he was asking about, trying to do the follow-up that he was requiring. And look, I mean, you know, you got to give Trump credit. He hung in there. He told lots of stories that exemplified, you know, his policy points. And I think as a communicator, we underestimate Donald Trump's ability to sort of package his arguments in these kinds of storytelling that are easy for people to digest. So his audience wasn't the Chicago Economic Club sitting in the room and dining on rubber chicken. His audience were, you know, blue-collar workers in Michigan and Pennsylvania and Wisconsin who, when they hear these stories, they can actually understand the economic points that he's making.
But if part of his audience here, Jeannie, was in Michigan, he again attacked Detroit, as we saw him do in Detroit just a few days ago. He's going to be back there later on this week. He called it horrible, talking about how it hasn't recovered. Of course, it did declare bankruptcy back in 2013, but it has seen a recovery since then. In fact, the city just announced earlier this year it grew in population between 2022 and 2023 for the first time since 1957. How does that play in a state which ultimately could have a hand in deciding this election?
Yeah, this is something we've heard Trump do over and over again, attack cities from Milwaukee and Detroit and, of course, New York City. And, of course, factually, there's no basis for it. We know violent crime, for instance, in Detroit is down to levels we haven't seen since 1996. And I think, you know, as I watched this entire interview, which I agree was so important, Donald Trump missed an opportunity here in my mind. He ended up talking about what? Defending January 6th, talking about Venezuela and Maduro, this strongman, this autocrat, this dictator, as wow, what a great job he has done cutting down on violence with the use of a police state. He is making certainly things that Republican leaders at the state and local level have pushed back against, as it refers to Aurora, as it refers to Springfield. The list goes on. And John Micklethwait was trying to have a sober, serious this conversation on his economic policies. And I can bet that is not where Donald Trump's campaign wanted him to go, to sit there and say those kinds of things. The attacks were all over the place. They were on everybody from the press to, to people who are running these cities and states, to immigrants. There was no fact-checking that he was going to abide by, and it was off the rails in true Donald Trump style. And that is a problem for Donald Trump, because I know he wants to double down in his base. Rick is right. But he's got to reach sober-minded people in the middle who like his policies first term, but are very concerned about this rhetoric. And I don't think he did himself any favors on that front. And of course, top of the list there is tariffs. He had absolutely no answer to the very serious economic questions about raising tariffs. He said sometimes 200, 500%.
All right, Jeannie Shanzano and Rick Davis with their clutch analysis coming out of the interview. They're going to be sticking with us for the rest of the hour. We thank you both, our signature panel, here on an important day as we go into overtime here on our special coverage live from Washington following Bloomberg's interview with Donald Trump. The former president talked about tariffs quite a bit today and policies he'd like to pursue if elected in the conversation we just brought to you in partnership with the Economic Club of Chicago. Let's listen.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm.
Joining us now for more here on Bloomberg TV and radio, Anna Ashton, founder of Ashton Analytics, former China analyst for the U.S. Department of Defense. And it's great to see you. Thanks for joining us here following this conversation. Donald Trump pushed back pretty hard on the issue of tariffs. He called tariffs his favorite word, the most beautiful word in the dictionary. Did he change the way you look at this in his conversation today with John Micklethwait?
Well, no, and thank you for having me on. It was interesting to listen to his remarks. I think we can all be pretty assured of where he wants to go with tariff policy, that he wants to raise the tariffs, and not just on China. He spent a lot of time talking about Mexico, for example, and he said that, our allies have been more problematic than our enemies, so the EU, Japan.
Well, Anna, as you mentioned, Mexico, according to factcheck.org, there is only one small Chinese car manufacturing plant in Mexico right now. But something else we heard from Donald Trump was the suggestion, if you make the tariffs high enough, and to quote him, so high, so horrible, so obnoxious, they'll come right away, meaning they will come and make things in the U.S. instead. What is the realistic chance that manufacturers in China are going to be able to suddenly up and move all that business to the United States and have supply come out of there? How does that actually translate in reality?
Well, I think it's going to be really interesting to see if this is, a sign of Trump kind of evolving his perspective on China and what he wants from the relationship, because he certainly wasn't really gung-ho about inviting Chinese investment into the United States in his first term. In a second term, would he be? It sort of sounds like it. It sort of sounds like he sees tariffs as a way to bring foreign investment into the United States to create jobs. And I think a lot of people could get on board with that from an economic standpoint. However, there are many, many people in Washington in both parties who are not particularly enthusiastic about Chinese investment in the United States, and not just in Washington. There are governors all over the country who also are not keen on that. So I'm not sure that it's within Trump's power to change hearts and minds domestically.
I want to ask you about what the former president said about Taiwan, Anna. He was asked whether he would send American troops to defend Taiwan in the event of an invasion or a blockade by China. He didn't really answer that directly. He said, quote, "I have a very good relationship with President Xi." Is his relationship good enough to avoid that scenario if he were reelected?
I think it's less about whether or not his relationship with President Xi is good enough, and more about the fact that, he is a confirmed. He does not want to have American forces fighting foreign wars. And he's indicated in other interviews that he's not particularly interested in sending troops to Taiwan unless Taiwan is going to pay more for U.S. defense. He wants more of a quid pro quo relationship than he believes we have right now. But again, this is where Trump diverges from the majority of minds that are shaping policy in D.C., both Republican and Democrat. I don't think that his own party is particularly aligned behind that idea.
Well, and perhaps the divergence that matters most, at least with 3 weeks to go until Election Day, Anna, is how his policy diverges from the policy that Kamala Harris has suggested she pursue. Keeping in mind, she has been attached to this administration that has left intact and in many ways, actually, in many instances, expanded the tariffs put into place under the first Trump administration. Harris, who has also talked about making sure the U.S. is leading the technology war against China. How realistically are we going to see differences in approach here? And is it just a matter of scale, if you will? Maybe not tariffs of the kind Donald Trump is talking about, but tariffs all the same.
I certainly think we're going to see tariffs all the same. But, you know, the Biden administration has, with its increase of select tariffs in the last month, made clear that they're interested in taking a more targeted approach. And, you know, that is overall the impression I'm getting from Harris's talking points. So I think that, you know, yes, we will see continued tariffs. We will see a continued emphasis on industrial policy as part of the effort to make the United States more competitive with China and ensure U.S. competitiveness going forward. But I don't think that a Harris administration would be interested in the kind of across-the-board tariffs on everything from China and things from everywhere else that Trump seems to be enthusiastic about.
It's great to have you with us today, Anna. Thank you. Anna Ashton is founder of Ashton Analytics, former China analyst for the U.S. Department of Defense. Just the voice we needed today. We thank you again. And joining us now is Democratic Congressman Sean Casten of Illinois. He serves on the House Financial Services Committee and brings the voice of a Democrat to the table here. Congressman, it's good to see you. Welcome back to Bloomberg TV and radio. What you just heard today from Donald Trump is the most complete explanation and most complete presentation we have heard of his economic proposals, making the Trump tax cuts permanent, a series of exemptions on things like tips, overtime, Social Security, and others that we might not even have time to list here today, and an overall approach to inflation that starts with energy. Drill, baby, drill, he says, will bring down prices across the board. Are you on board?
Well, look, it's hard to follow a lot of that because so much of his representations of the economy were just flat wrong. We've seen surges in foreign direct investment over the last 4 years. We've seen almost a doubling in manufacturing investment in the United States over the last 4 years. Yes, there's been inflation, but slower than all the other countries in the OECD. We've had record-setting job creation. This is an economy to celebrate, and he seemed to be focused on bad-mouthing it. But I want to just talk about the energy piece for a moment. In April of 2020, under Donald Trump, the price of oil collapsed because of COVID. Trump responded by calling the Saudis and threatening to pull all military aid out of Saudi Arabia unless they curtailed production to raise the price of oil to protect U.S. oil producers. He has always put the interests of producers over the interests of consumers. And, you know, when you're talking about drill, baby, drill, we are using a lot less coal than we used to in the United States. We've had basically no growth in oil. That's because we've invested in efficiency, we've invested in renewables. The person with a solar panel on the roof is not paying for electricity anymore. What Trump is pushing for is not lowering costs for consumers on energy, but raising prices to energy producers. He's done that consistently, and let's not pretend it's something else.
Well, Congressman, as we consider this is a plan he says ultimately will lead to lower inflation, let's talk about inflation and who all has a role in combating that, because obviously the Federal Reserve is part of that game too. Donald Trump was actually asked about the Fed and the influence the president should have on it in this conversation. Let's remind ourselves of what he said.
I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
Congressman, what's your response to that?
I guess you have to really love the economy of the 1890s to want a non-independent Fed and a massive tariff policy. Jay Powell, you know, I don't agree with Jay Powell on everything, But Jay Powell has done a masterful job, as he should, of staying above politics. You know, the idea of an independent Fed is that, as your viewers know well, right? Sometimes it's not politically wise to do the right thing for the economy. Interfering with that is a really, really dangerous path to go down. And we've been there in our past, right? You know, there was a point when we didn't have an independent Fed. Those weren't good times for the U.S. economy.
Well, with that said, where is the economy going to be here, in your view, when the next president takes office, Congressman? This is something that we ask a lot of lawmakers and economists here, knowing that we're seeing, or at least feeling, some concerns tied to a slowdown here. Obviously, interest rate cuts are part of the picture, which some could suggest benefit the incumbent. In this case, I guess we could call that incumbent Kamala Harris. But what's your view about where we're going to be in January when you come back to Washington?
You know, I suppose prognostication is a fool's game, but I think, you know, some of the metrics that we've been watching closely in the economy, we've seen this surge of investment for the last 4 years, really for the first time in decades. We've consistently seen job creation outposting worker creation. Our workforce has not been growing as fast as the jobs have. That was creating some upward pressure on inflation, was certainly contributing to it. It's a good problem to have, right, because there were so much investments going on in the United States. We have seen some of that pressure easing, frankly, thanks to inflation. And one of the concerns that I have personally is that it has become so bipartisan to demonize immigration. And I think we shouldn't lose sight of the fact that immigration is substantially what's allowing our economy to create jobs so quickly and not have upward pressure on inflation. Inflation's come down. I do get concerned about that xenophobia and where that might push us, but on balance, I feel pretty good about where the economy is right now. We're still staying, 4.2% unemployment, which is pretty good. The job revisions, such as they are moving in the right direction, and let's keep a steady hand on the tiller.
Congressman, we just have a minute left here, but it was brought up in this interview and again in our conversations afterward, the deficit impact potentially of Donald Trump's plans. And the median estimate from the Committee for a Responsible Federal Budget, it's $7.5 trillion. Harris's is lower. Yes, $3.5 trillion is their base case, but that still does add to the United States' burden. How do you defend some of those policy ideas, knowing the fiscal impact they could have?
Yeah, look, I think it's a real concern for all of us that the deficits keep growing up. Any serious conversation about the deficits, has to talk about, we have Social Security, Medicare, and the military. That's the overwhelming majority of what's there. And if we decide politically we don't want to touch those three, then we have to talk about the revenue side of the equation. What is the single most important thing we can do that still gives people the dignity they deserve in retirement and still keeps the United States as the leader of the free world is to fully fund the IRS. The head of the Trump IRS told us that the under-collection of taxes that are due but not collected, reaches almost $1 trillion a year. You can go a long way towards cleaning that up if we get there. Trump is not wild about that. He's a guy who's obviously been found guilty of tax fraud. But we have to fund the police, right? We have to fund the IRS's ability to go out and make sure that we collect. And if we do that, we create a ton more headroom, and I think then we can have a conversation around, well, if we tweak this tax this way or this tax this way. But it's a purely academic conversation if we're not actually collecting the taxes anyway. And remember, these things are over 10 years when the CBO does these forecasts. $1 trillion a year is $10 trillion over a 10-year forecast. Mm-hmm. Let's get it done.
All right, Congressman, appreciate your time this afternoon. That is Democratic Congressman Sean Casten of Illinois, member of the House Financial Services Committee. We appreciate it. We're continuing to analyze Trump's comments made just moments ago during an interview with Bloomberg editor-in-chief John Micklethwait. We should note, as John noted, Kamala Harris has been invited to participate in a similar conversation. Back with us now for final thoughts is our signature political panel, Rick Davis of Stone Court Capital and Jeannie Shanzano of the Center for the Study of the Presidency and Congress. I don't know how many more interviews, opportunities like this there will be in the next 3 weeks, Rick, because that's all the time that is left. How many more conversations do you expect Donald Trump to take part of through traditional media means like this, when he's been going on podcasts, as has Kamala Harris, other means of reaching out to voters?
Yeah, I think they've both been in the bubble, right? So they'll do interviews with friendly outlets, and Donald Trump has been more aggressive in spending time on his friendly outlets than Kamala Harris has. But as we talked earlier in the show, Kamala Harris has a very big interview tomorrow with Bret Baier on Fox, taking herself out of the bubble, putting herself in an environment, frankly, probably the equivalent of what we just saw today at the Chicago Economic Club. And so I don't think you're going to see much more of that. I would be surprised if Donald Trump wants to re-up on another deal like he did today. And at the same time, without these presidential debates, we don't really have any way of scoring where we think the presidential candidates are right now. And this is the time when a lot of American voters are making up their minds in the last instance. In other words, I'm ready to vote now. Who's it going to be? And there are still, I know it's hard to believe after the long slog we've been through, there are still voters trying to figure out who they want. And I think these kind of events help dictate that.
Remembering, of course, and you remind us of this a lot, Rick, some people are already voting and have already voted with early voting and absentee ballots in the mix here. Jeannie, what do you think about what Rick just said? Does Kamala Harris need to respond to what Donald Trump said today?
I think she should. I think these are exactly the kind of forums, I agree with Rick, in which we need to hear from these candidates, and both of them. And I give Donald Trump a lot of credit for sitting down with a one-on-one interview and taking some tough questions. And I think people should go back and listen carefully to what he said. I mean, he talked about everything from not wanting to appoint judges who were too old. And when John asked him, well, you're 78, he said, no, that was justice. Right? He talked at the end about Republicans himself being a party of common sense, and yet common sense questions like, if you decrease taxes and you don't cut spending, how do you pay for that? He sort of poo-pooed a lot of that, to use a very formal word. So, I think people should go and listen to what he had to say. He talked about how he weaves, and he certainly weaved a lot today. And the one that really sticks with me is the one about the Fed. For anybody who wants Donald Trump to have some voice in the Fed, then think about, would you want that if it was a Democrat? Because historically, that is very problematic for democratic economies.
That's Jeannie Sheehan Zaino alongside Rick Davis, our signature panel today. Thanks, both of you, for being with us as part of our special coverage here. We're going to have a lot more on this a little bit later on today. The late edition of Balance of Power that starts at 5 p.m. Eastern Time with much more to unpack. Kaylee Lyons will get back together in a couple of hours with a lot more here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Very good afternoon, everybody. Live on TV, radio, YouTube, Bloomberg Originals. Also catch Bloomberg Business Week magazine. It is now the new issue on newsstands as we speak. I'm Carol Masser along with Tim Stenivek. Let's get to the setup on this Tuesday, October 15th. And Tim, not likely to be a record-setting day on Wall Street today.
Yeah, semiconductor stocks getting crushed. We're going to have more on the trade in just a few minutes. Also, speaking of the trade, the big banks, the latest drop of big bank earnings, I should say. We're going to get all the details, what you need to know about what's come out and what's still coming.
Yeah, those stocks getting tossed around in the trade and very different from what we saw from pre-market conditions earlier this morning. All right, we'll get to that. We're also going to get into the property market, its inflection point. We're going to talk about that with Amy Price. She is the president of the real estate investment firm BGO. So curious about what she has to say about industrial, about office. We're going to get to that in just a moment. But first up, be sure not to miss a Bloomberg Business Week story by becoming a subscriber today. You'll unlock deep reporting and analysis from reporters around the globe, including unlimited access to Business Week. Check out our offers right now. You can find it at Bloomberg.com/subscribe now.
All right, let's get into it. With big bank earnings, Carol Masser, we got another big batch of earnings from the Wall Street banks, from Bank of America, Citigroup, and Goldman Sachs, all rallying at their highs today. B of A holding on to some of it, while Citi is selling off a little bit.
Yeah, it's definitely been bouncing around here. With a look at the quarter outlooks and the comps, back with us is Cheryl Pate. She's Senior Portfolio Manager at Angel Oak Capital Advisors. She joins us from Atlanta on this Bank Earnings Tuesday. Cheryl, good to have you back with us. So some initial enthusiasm, and even earlier in the trade when it comes to the big three reporting today, it's playing out differently. Goldman just up about 0.25%. It was up 3.4% earlier in the session. Citi was up nearly 2% at its highs today. It's now down almost 5%. B of A, meantime, was up about 3.5% at its highs, still holding on to a gain of about 1.2%. Walk us through the earnings from these big three, what it says to you, and how you think they did.
Yeah, absolutely. I'm happy to be back on. And I think the stock action today would line up with how we think the earnings really came out. I think we did have a preference for Bank of America into earnings, and I think we got a lot of what we wanted. There are certainly signs that the operating environment is becoming more positive. They highlighted that they think they're at the inflection point on NIM, and that I think has been, the key focus for a lot of investors when we hit that inflection point. Other than that, we also were positively encouraged by what we saw in consumer credit. The consumer continues to hold in well. We saw good trends on credit cards in terms of some of the charge-off data improving from the prior quarter. That lines up with what we've been seeing in the monthly data as well. And then capital markets are strong too. If we loop that back to Citi, I think it's still a longer-tailed, more of a self-help restructuring story to go there, but a lot of the similar trends played out. I would say they were more cautious on the NIM guidance and guiding to flat, although that's probably a little bit better than what investors and analysts were expecting. And to round it out with Goldman, I think, it was a very strong quarter, capital markets across the board. I think there's still a little bit of question on the consumer division there. But all in all, I think it's been a good start to earnings season.
Hey, Cheryl, big picture, you mentioned the consumer a few times there, but if we take these three banks at what they said today, what's the picture of the American consumer they painted? And I know it's not monolithic. There's certainly some commentary from Bank of America about lower income consumers that differ from middle class and higher income consumers. But how would you characterize it taken together?
Yeah, when we look at the consumer broadly, I do agree. I think we've seen really no weakness in terms of retail spending, particularly on the higher end, but still some pressures on a lower end, lower FICO type consumer, and that'll hit different banks and consumer finance companies differently based on their portfolios. But I think what we can see is some credit normalization happening, but at a decelerating pace. So if we're moving into a rate cut environment and achieve a soft landing, we feel pretty good about the consumer here and keeping eyes on the lower end, but some of the positive tailwinds should be helpful there.
Hey, Cheryl, when you look at the big banks overall, of course, JP Morgan kicking off the earnings season on Friday, and when you look at the group and the comps, who is best in class? Is it JP Morgan in your view?
I do agree with that. I think you do see that there is a valuation premium that comes along with JP Morgan, and I do think it is deserved. They've proven time and time again that that there really is this concept of the fortress balance sheet that has been talked about for years, but also they continue to deliver on sort of firing on all cylinders. So consistency and strength continues to play through there, and we do think that the premium valuation is deserving.
Were you buying? What have you been buying or selling? I am curious, coming off of earnings or heading into earnings or heading out of earnings.
Yep, I would say we've been finding opportunities, I would say, on the debt side of a lot of the money center banks. We have been adding to positions in names like JP Morgan and Bank of America. And we remain more cautious on the regional banks. Rate cuts could help the narrative there. But at this point in the cycle, we have a preference for the large cap given diversification of the business model, upside from capital markets, and consumer exposure.
We should point out JP Morgan Chase, the first of Wall Street's 6 biggest banks to tap the U.S. investment-grade bond market after reporting earnings, really setting the stage for a potential flood of issuance from the banking group overall. JP Morgan selling the bonds in as many as 4 parts, according to a person with knowledge of the matter. So that talks about some of the debt, Cheryl, that you are suggesting and that may be interesting.
Hey, Cheryl, any commentary or insight into deal making for the final quarter of the year and into next year? What M&A will look like, what IPOs will look like, and of course the fees associated with those for some of these banks?
Yeah, I do think we are in sort of the early stages of the capital markets recovery. So we do expect continued strength coming out of both investment banking and the trading businesses in the fourth quarter and certainly into 2025 as well. I think a little bit of relief on the rate side helps. We're hearing that pipelines are strong. And then even if we think about M&A within the banking sector specifically, we think there's a lot of reasons why that will increase over the next year or so as efficiency gains and cost saves remain a key focus for the sector.
In terms of Citigroup, which we know is been kind of changing in terms of strategy, and Jane Fraser making a lot of moves. One of our stories that's on the Bloomberg talks about how she has had to deny that the bank had a secret regulatory straitjacket and took repeated questions by analysts for her to be clear that U.S. regulators have not placed Citi under an asset cap, which has been one of the most feared and prohibitive penalties that we know regulators can place on U.S. lenders. She said, let me be crystal clear, we do not have an asset cap. We're not expecting any. But what does that say that she had to say that so many times and the concerns about, where Citi is going?
Yeah, I think there is still some uncertainty as to the restructuring and what Citi looks like when we come through the other end of this. I think the first answer on the analyst call was a little evasive and really was what was driving the need to be clear about that later. But to me, that signals there's still a lot of work to do in terms of execution on the strategy. And it's, I think, going to take some time for investors to buy into it.
Hey, Cheryl, you mentioned that JP Morgan kind of stands out as a leader, at least thus far, when it comes to rounding out the earnings season. Give us an update or your view on who's at the other end of the pack right now. Which bank or which stock is lagging?
If we're sort of looking at who's come out thus far in sort of the larger cap world, I think I would say, both Citi and Wells on the lower end. Now, there's a lot of, sort of regulatory self-help type narrative around both of those names. But I think also in terms of, forward guidance was a little less optimistic than what we're seeing at some of the other banks. And just, maybe some more room in terms of improving confidence and driving valuations higher. It's a little bit of a longer tail, and there's some messiness around the numbers that cause some varying views.
Any indications in terms of the big bank earnings, what it tells you about kind of the U.S. economic outlook or even the global economy, since these are global banks?
Yeah, I think most of the commentary, I would say, generally focused on sort of domestic conditions. And I think it was a little bit more optimistic tone than last quarter. I think, capital markets rebound is helping a lot here, but also we got the rate cut pretty late in the third quarter. Mm-hmm. So there's, been some benefit that's played through in terms of AOCI and capital levels. But I don't think we saw the full benefit really in the numbers yet. And that's sort of to come in terms of the operating environment. And it seemed like a more optimistic tone, generally speaking. I think Jamie Dimon was probably the more, not to say negative, but more cautious on sort of the more global environment. Mm-hmm. And that could play into some of the more international business lines, but that still tends to be a smaller piece. The next year or so is really, I think, going to be driven off sort of the fundamentals of key banking businesses.
Hey, Cheryl, election less than 3 weeks away at this point, 3 weeks away exactly. Certainly top of mind for us. Our editor-in-chief here at Bloomberg News, John Micklethwait, just wrapping up an interview with former President Donald Trump at the Economic Club of Chicago. I'm thinking, in your seat, how are you thinking about the way that a Harris administration or another Trump administration would affect these big banks?
Yeah, I think when we sort of think about potential outcomes from the election, the view from my seat would really be, a Democratic win, I think, is status quo in terms of where we are, in terms of capital levels. There's, perhaps a faster path to getting the final details on Basel III Endgame, and a Republican win, I think, would really maybe help advance some of the M&A I was speaking about and sort of loosening some of the regulations around combinations, but also speeding up the time of approvals, which has been a bit of a lengthening process over the last few years. So sort of status quo to right. Positive. Yeah.
Cheryl, real quickly, though, Donald Trump did tell John Micklethwait when it comes to the Fed, I think that if you're, he said he thinks it's a fair game for a president to tell the head of the central bank how he thinks interest rates should change. If there is a second White House with Donald Trump in it and he plays around with the Fed, that's a problem, right? Real quickly, just got 15 seconds.
Yeah, no, I would agree. I think the independence of the Fed is critical to our.
All right, going to leave it there. Cheryl Pate, Senior Portfolio Manager at Angel Oak Capital Advisors. You're listening and watching Bloomberg Business Week on TV, radio, YouTube, and Bloomberg Originals.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Former President Trump says his policies will inspire growth despite adding to the debt as he addressed business leaders who worry his economic plans will fuel inflation. In an interview aired live on Bloomberg Television and Bloomberg Radio, Bloomberg News editor-in-chief John Micklethwaite at the Economic Club of Chicago, the former president said, quote, "We're going to bring companies back to our country." The Dow, the S&P, and NASDAQ all trading lower. We got the S&P at the lows of the session right now. Stocks getting hit as disappointing earnings from Europe's most valuable tech company, ASML, and concern about tight U.S. restrictions on chip sales spurred a sell-off in the industry that has been powering the bull market. S&P right now down 36, down 0.6%. Dow Industrials also down 0.6%, down 270 points. We've got NASDAQ down by 0.9%. On a down day for the rest of the market, the Russell 2000 index of small cap shares up now by 0.7%. 10-year 4.03%, the 2-year 3.94%. Gold up 0.6%, 26.64 the ounce, and West Texas Intermediate crude now down 3.9%, 70.94 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Well, the property market, it has started to stir again, bolstered in part by the Federal Reserve's first interest rate cut in more than 4 years. It's not, though, necessarily full steam ahead. As Bloomberg's Abigail Doolittle reported recently with Natalie Wong, many parts of the commercial property market have started to hit a bottom, but offices remain an outlier. This is according to one specific real estate investment firm, BGO, which oversees, Tim, more than $83 billion.
Here to talk more about that is Amy Price, president at the private commercial real estate firm BGO, along with Bloomberg News markets correspondent Abigail Doolittle, who follows and reports on the real estate space as well. They both join us here in the studio. Amy, I want to start with you and just get this idea from you that the property market has started to stir again. When we hear that, when we see that, what is the time period that's referring to? Is that referring to when we knew rates would get cut or when rates were actually cut?
Yeah, it's a good place to start. I would say we will look back and see the latter half of 24 as that turning point for commercial real estate broadly. Now, as you pointed out, office is a bit of an exception to that. And I think we started to see that even in anticipation of that first rate cut. We saw more liquidity in the market. We saw more activity, both on the credit side and on the equity side. But we're also seeing it now, into the fourth quarter of this year. So yes, I'd say with the anticipation of rates having peaked, with the anticipation of values having found their bottom and starting to increase again, office a little bit different, liquidity is returning to the market, and that's healthy.
I want to ask you, in anticipation of rates going lower, I'm curious, how important is it that rates actually continue to go lower a lot to have a dramatic difference and impact on real estate? Like, how sensitive? And in terms of what the Fed does.
Yeah, real estate from an income and yield perspective, it's quite sensitive.
Right.
And so I think certainly where interest rates level out and where they get to is very important. I would say the pace is less critical. As an investor in real estate, we are generally long-term investors, so we're really looking for yield and opportunity now, but we're measuring that also aligned with just the demand drivers that are longer term and that are kind of acyclical. So we're looking for both. And so from an investor's perspective, certainly how quickly rates adjust will drive velocity in the market, but longer term, it has less of an impact.
How much lower would you like to see it go, though?
Well, we'd like to see it go.
But I mean, realistically, to really kind of get a jolt.
Well, listen, I think the jolt is probably, more than 50 basis points, right? Another 25, 50 is probably expected, more ordinary course. Again, question is the timing. Going beneath that, we'll start to see more of a jolt from what's already been baked into the market today.
Right? So that's a pretty bold call, Amy, on the idea that this last half of 2024 could be the bottom in what's been a pretty painful cycle. So many people saying that it's going to take a long time to work it out. But one piece, as you were mentioning, office, that's still in pain. I was talking to one of the top private credit guys recently, and he was saying that while the rest of the market may be starting to recover, that office is so painful, it's almost acting like this big weight around the leg of real estate. Are you seeing that at all? And to what degree could it remain a problem into 2025, understanding that the bottom may be made?
Right. So office is idiosyncratic this cycle, for sure. We're seeing the headwinds from return to office, start to normalize the pendulum to kind of find its equilibrium. But there's questions on the horizon about what does AI do for the future of office jobs, et cetera. So if you look forward in office, there's just, a much murkier picture ahead. And that is a bit of a weight against a diversified pool or a diversified strategy. So I think that's part of why we're seeing more interest in, sometimes people refer to them as niche sectors, but specific strategies where you say, okay, I can invest into, some of these sectors that are counter-cyclical, right, but don't have the same headwinds as office.
Does it eat into the dry powder, though, of, say, some of the big sovereign funds that are in office that they can't get out of it, so they just don't have the money to allocate to these other sectors you're talking about?
There is definitely capital tied up in office that would like to be out of office. But at the same time... How much? Probably more than you would think. At the same time, there's also... I'd say what matters is the overall allocations to real estate as well. And what we are seeing now with rates normalizing, hopefully beginning to decline, a renewed interest in real estate outside of office, right, as an alternative for credit and yield strategies. So we're seeing some of that capital come back in to complement the holdings in office.
You operate in 27 cities around the world. Where exactly are you seeing strength and where are you seeing weakness in the U.S. and outside the U.S.?
Yeah. So one comment I'd make globally is that we see strength in Asia. We don't invest heavily into China, but we do in other markets, Japan in particular. And so some of what we've been talking about in office, for example, this conversation is not relevant the same way in Japan and in Asia. So we see opportunity and momentum there. And then I'd say in North America and in the US in particular, there are some markets, what we try to do is just, obviously you're trying to be predictive. Where do we expect population growth to be? Where do we expect job growth to be? So we are looking at markets that are both the anchors, New York, absolutely a market that we are figuring out how to, we want to invest into at this point in the cycle, and then complementing that with growth markets. So some of the markets we think are compelling for industrial, for residential, markets like Atlanta, the Virginia market, Charlotte, they're seeing a lot of
anything
good
south.
Demand. Well, not too far south, but yes.
Can I ask you something though? When you talk about office properties and concerns, Class A too, or is Class A still okay? Because we keep hearing that from everybody. Like Class A is fine. It's the other stuff.
Yes, excellent point. It is absolutely the winners and the losers. So even beyond Class A, what I'd say is the highest quality, the best amenitized office, very strong demand. And if you one statistic I'll share is that if you look at buildings that have been built just in the last 10 years as one metric of quality, there's positive net absorption, i.e. more demand for that space in the last 3 or 4 years. Now everything else built before that, negative net absorption by a multiple. So you really see that in what tenants are looking for in terms of making occupancy decisions today.
So that reminds me of industrial, actually, because one of the niche sectors that BGO likes is industrial, and in part because 70% of it just does not really fit our lifestyle anymore. Exactly. Talk to us about building that up and those investments that you're making in that space that you favor.
And we have about a minute left.
Okay. So industrial, and more specifically, I'll touch on cold storage as one component of an industrial strategy because it exemplifies this well. What we look for is, one, where are there those secular shifts, right? So e-commerce, technology, robotics, automation. This is transforming the way real estate is a critical piece of the supply chain in the delivery of those goods. So what are we looking for? We're looking for the barriers to entry, if you will, right? And the opportunity to kind of develop a high quality building, a modern building that's distinct from what was built 20 years ago and is really not meeting the demands of tenants today. So, for example, ceiling heights, there's physical characteristics that you can't, renovate, you have to build.
Come back.
Yes.
Both of you, I'd love to continue this conversation. Really cool insight. Amy Price, president of BGO, and of course our Abigail Doolittle, markets correspondent here at Bloomberg News. You're listening and watching Bloomberg Business Week. Coming up, the global economy from the view of the world cities. That's next.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are back here on Bloomberg Business Week. Never miss a Bloomberg Business Week story by becoming a subscriber today. You'll unlock deep reporting analysis from reporters around the world, including unlimited access to Business Week. Check out our offers. You can find it all at bloomberg.com/subscribe now. We do want to also get to Business Week One community. We've got another Bloomberg community, and that is Bloomberg City Lab.
It reports on and keeps tabs on the world's cities. As part of that, getting underway today, the 11th Bloomberg City Lab, organized by Bloomberg Philanthropies, and it brings together more than 500 mayors and leading policymakers, innovators, and creatives right now in Mexico City.
All right, let's head there right now to check in with Juan Pablo Spinetto. He's Bloomberg Opinion Latin America columnist. He joins us from Bloomberg City Lab Summit in Mexico City. JP, good to have you here on Business Week. Tell us a bit more. We just scratched the surface about the summit. Tell us about what goes on, who's there, what's the mission, what are the goals?
Carol, if you are into cities and how cities are governed, this is like the Super Bowl or the World Cup, right? Mm-hmm. We have these hundreds of mayors from all around the world gathering here. We have the mayor, for instance, of Istanbul, Helsinki, Rosario in Argentina, and they all gather here to discuss common solutions for their common problems, right? These big cities around the world face housing problems, transportation problems, pollution problems. And the idea of this summit in Mexico City is that they gather, they discuss these problems, and they try to find common solutions, right? We heard from the new Mexico City Mayor Clara Brugada early this morning opening this event and pledging that they're going to invest in housing and all the big problems that this city, a city of 22 million people, if we consider the metropolitan area, one of the largest in the world, faces, and that Clara Brugada said they want to tackle in this new government.
The U.S. is not front and center, of course, when it comes to what you guys are speaking about in Mexico City and what everybody's gathering about. But we have an election coming up, and we did just hear from Bloomberg News editor-in-chief John Micklethwaite about from the Economic Club of Chicago talking to former President Donald Trump. I'm wondering, JP, how the election is coming up. It is the world's largest economy. How is it top of mind out there at the City Lab Summit?
Yeah, I mean, the election is in everybody's mind, obviously. Mexico is the largest trading partner of the U.S. This year became the largest, even overtaking China. The country exports $50 billion every month. So you can imagine that the comments that Donald Trump has made in terms of imposing tariffs and also this big deportation program has not well received here. But at the same time, a bit of the perception that there is in the elite is that they already went through Trump, right? Between 2016 and 2020. I'm just reporting what I can gather from these conversations with executives. So they are waiting to see what is going to be the attitude in case either candidate wins the election. The big problem or the big question for Mexico now is the revision of the USMCA. This is coming up in 2026. Donald Trump already says that he's calling for that revision. And what are the new terms that the incoming administration in the U.S. sets to this very important trading partner? This is the main issue that Mexicans want to know.
You know, it's interesting, and if you go to Bloomberg.com or check it out on the Bloomberg terminal, there are various stories and headlines related to that conversation, comments by Mexico, the city, the mayor, I should say, of Mexico City. You know, one of the things that I think all cities are dealing with globally is trash and garbage, and they're working on this, right, to make it a better place to live.
Yeah, exactly. Trash is a big issue here. Water is also a big issue here. You may have heard about the big water shortage that happened this year in Mexico City. At some point, the reservoirs that supplied all this water to the city got to only 26%, right? And there were a lot of fears that we could reach day zero for Mexico City in terms of running completely out of water. I always thought that was an exaggeration, and in the end we have a really great rainy season. Now reservoirs are back at 65%, but Clara Brugada, the mayor, this morning said that she will start a program to try to save all this water that is being lost, right? This is a big problem for Mexico City. It gets the water, but the water is lost because they don't. The infrastructure is old, it's not being used for consumption, and it waters down, right? So that's a big issue that the incoming administration pledged to solve.
Yeah, and a super important one. And we see the struggle certainly with kind of basic resources like water around the world. JP, thank you so much. Our JP Spinetto, Bloomberg Opinion Latin American columnist from Bloomberg City Lab Summit in Mexico City. We'll be featuring some interviews over the next day or so. So catch them on the Bloomberg and at Bloomberg.com. That's going to do it for us this hour. If you're watching on TV, the close is coming your way in just a moment. Tim and I continuing, though, on Bloomberg Business Week, tracking some of the moves in the semiconductor area. It's one group in the equity universe under pressure.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody. 1 hour away from the closing bell on this Tuesday, October 15, 2024. Carol Masser along with Tim Stenevec. And Tim, we got stocks pretty much just around their lows of the session.
Yeah, a big part of that has to do with what's going on in the chip space today, certainly in the doldrums.
Smackdown.
Yeah, for a few reasons. We've got the reporter who broke the story that's moving NVIDIA stock. Also, we get the latest on what exactly is going on with ASML and those numbers that were released ahead of their planned release tomorrow.
You were like, we talked about NVIDIA on our planning call. You're like, hey, guys, have you seen what's going on with ASML?
Got to talk about ASML.
All right.
And we
also,
will, don't worry.
All right, that NVIDIA story, though, chips in general, concerns about what might be able to be exported. That is a scoop by our Bloomberg TV team. We've got another scoop. Ed Ludlow has the latest on those cyber cab robots. You know, those that are moving with a little help from we humans? Does that make them a robot?
Can they be programmed to love?
Is that what you want to know?
Yeah, that's what I want to know.
All right, and listen, this is a super important topic. It's an election year. It comes up a lot. It comes up all the time, and we're talking about, Tim, free speech.
Yeah, what about fearless speech, though? It's the title of a new book. The author joining us in our 4 p.m. hour. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Right, thank you very much, Tim and Carol. We have got 59 minutes to go ahead of the closing bell. A lot of red on this Tuesday with the Dow, the S&P, NASDAQ all declining, just about the worst level of the day. S&P right now down 41, 58.18, retreating from a record, down 0.7%. The Dow down 270, down 0.6%, while NASDAQ is down 193, a decline now of 1.4%. 10-year yield at 4.03% with a 2-year that's now yielding 3.95%. Gold up $16 the ounce, up 0.6%, while West Texas Intermediate crude is down 3.8%, 71 even a barrel. Stocks got hit as disappointing earnings from Europe's most valuable tech company, ASML, and concern about tighter U.S. restrictions on chip sales spurred a sell-off in the industry that has powered the bull market. Former President Trump says his policies will inspire growth despite adding to the debt as he addressed business leaders who worry his economic plans will fuel inflation. It was a wide-ranging conversation heard on Bloomberg Radio on a number of topics, including tax, tariffs, and technology. He was also asked about the chair of the Federal Reserve, Jay Powell.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do?
Former President Donald Trump speaking with Bloomberg editor-in-chief John Micklethwaite in an exclusive conversation. Shares of DJT, Trump Media and Technology Group, they are down now by roughly 5%. So again, it is a down day for the U.S. stock market. The Dow, the S&P, NASDAQ, all declining. S&P right now down 41, down 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. I'm looking at shares of Boeing right now, Carol Masser, up by more than 2%. It's because the company took a step forward.
Because everything's just fine now?
Yeah, don't look at the year to date. Don't zoom out. Let's just say that.
I am. It's down 41%.
Okay, there it is. The context important. The company taking a step toward raising as much as $25 billion, funds that would give the troubled plane maker the financial resources to withstand a paralyzing strike and work its way through a series of operational setbacks. We're talking about something that's known as a shelf registration. George Ferguson is going to explain what exactly that means. He's Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. He joins us from the Ishka Aviation Investival.
First of all?
Did you know that there's I've never heard of Investival.
What is that?
I said to Paul Brennan, Investival? It's an investing festival, Carol.
Okay, is there
I believe it's called
what is it, pretzels?
Portmanteau.
People dancing on stage? What is it? No, what is it?
It's aircraft lessors dancing on stage.
Ooh, sounds fun. I love it. Well, thanks for taking a break from that to explain shelf registration and what's going on here. What were you going to say, Carol?
What do we? So is it investors, analysts? Like who's all there? Like what is it?
Yeah, so it's a lot of lessors and aircraft finance folks on stage talking to investors, about the current state of lease rates for airplanes, lease rates for engines. And as you can imagine, as companies like Boeing and to a lesser extent Airbus have problems building airplanes, these folks are the beneficiaries. Now, don't run out and try to get involved immediately, because I can tell you there's a lot of people that have flooded into this space. A lot of money's gone to the leasing business, and so it's quite competitive right now.
Do airlines, who leases versus who buys, if we're thinking about the household names that we talk to you about each and every day, George?
So, I mean, usually the bigger airlines who've been around longest lease the least, right? So the Uniteds, the Deltas lease the least. The young upstarts usually lease the most. Frontiers, Spirit to a lesser extent, but Spirit, JetBlue has a fair amount of leasing. A company like Southwest has little to no leasing. In the long run, when you go through a really bad economic downturn, you probably don't want the entire fleet leased, because you'd like to have the ability to park some of it, not have to pay a monthly fee to fly it. It gives you more stability, but if you're growing fast and you need cash, lessors will get you airplanes with minimal cash.
When it comes to the Boeings and Airbuses of the world, do they sell more to lessors or to owner-operators?
So they usually sell to the airlines, owner-operators, if you want to call them that. And then what happens a lot of times is the airlines will be in the order book. When the airplane comes up for delivery, they'll turn around to the lessor community and say, hey, I got a new Boeing 737 coming. I want someone to help me finance it. What can you give me? And so the lessors will all sharpen their pencil and come up with a lease rate, and that's, it can get very competitive in that stage.
And we're not even talking about freight at this point. We're talking about
but it's another.
It's a big part of the business.
Yeah, exactly. All right, big part of the business is obviously Boeing. So let's go there. We mentioned Boeing shares are higher today. This move to raise as much as $25 billion. We talked about it a little bit, actually a lot yesterday with Julie Johnson about the possibility of raising cash. George, tell us about what we know and what this might do for Boeing. And what is a shelf registration?
Yeah, so I think, I've seen the shelf registration for the 20 or 25 billion. My sense is they don't want to do that right away, right? There'd be a lot of dilution, but they don't want to go to the market for too small of an amount. So I keep hearing sort of 10 to 15 billion. I think that really gets Boeing through at least a couple quarters, I would think, of potential burn in a strike. And I think really what the company and the new CEO are trying to do is, they're at the $10 billion mark when they announced, which is about the limit for what they need to run Boeing. I think Kelly Ortberg and Boeing management really want a war chest where they could say to the union, look, we have staying power here, so you need to come back to the negotiating table, and we need to talk about, what items in your demands are nice to haves, have to haves, and we can try to cut a deal. And I think, again, $10 to $15 billion gets Boeing multiple quarters, I think, of potential cash burn. And then the union really has to ask themselves, do they have the staying power? Do their their members have the staying power to go a quarter? I suspect not. Most Americans don't have that kind of savings sitting at home.
George, just because this is not familiar to me, but explain sort of the structure of a deal such as this. It would be bonds and shares. Would it be dilutive in some sense to shareholders? Help me understand the finances here.
Yep, so I should have mentioned that. So it's my understanding that this is all shares.
Okay.
Shelf offering for just shares. Although I could tell you I was on the way to my Investival this morning reading this on the train. So if I missed something on the bond side, apologies. But I think it's just shares. I think Boeing needs to be careful too, because additional debt could knock them out of investment grade. I think they're trying to weave a course here that would keep investment grade for the company, although it's certainly a risk. And yes, dilution would absolutely occur here. Right, market cap right now for Boeing is about $90 billion. So if they raise $10 billion, via this offering, you're talking about 11% dilution for the shareholders. And that's why I think they want to be careful about how much they raise. They got to raise enough So they can look the union in the eye and say, we got a lot of staying power here. So let's talk about what we're going to negotiate as a deal. But they don't want to get so much that they dilute the shareholders too much, right? If you want the $25 billion, you're going to be diluting the shareholders more than 25%. That's a pretty rough day if I'm a shareholder. So it's a dance here again to get what they need and have enough, tucked away so they can go the distance without really hurting the existing shareholders.
All right, so appreciate it as we continue to follow what seems to be almost daily updates, certainly weekly updates when it comes to Boeing. George Ferguson joining us from New York City, Ishka Aviation Investival.
Investival, it's a portmanteau.
I love that.
Yeah.
He's our senior aerospace defense and airlines analyst, Bloomberg Intelligence, getting also a little window into the leasing world when it comes to airplanes. Really appreciate it. Watching airlines, are also watching in a big way. Got to get to one of the big market stories today, and that is the semi space.
Yeah, taking a look at the stocks right now, it's down more than 5%. A cloud hanging over the industry. You got ASML shares plunging the most in more than 25 years. It booked only half the orders analysts expected in the third quarter. It lowered guidance for 2025. And NVIDIA shares also falling today after reaching a record yesterday. Biden administration officials have discussed capping sales of advanced AI chips from NVIDIA and other American companies on a country-specific basis. People familiar with the matter telling our own Mackenzie Hawkins, Bloomberg News U.S. economic and industrial policy reporter. She joins us from our Washington, D.C. bureau. Ian King is also joining us. He's Bloomberg News U.S. semiconductor and networking reporter. He joins us from our San Francisco bureau. Ian, the NVIDIA story is certainly a big one, but when you think of the entire chip sector also reacting to the news that we got mid-morning New York time from ASML, shares plunging today. What's the signal that they sent?
Yeah, I mean, orders are obviously an indicator of future revenue. And what they said was, we're getting a lot less in the future than you guys had been expecting. And that was not welcome news. It was done in a haphazard way. The report was published by mistake ahead of time. So caused basically a panic. And you've got to remember that this company is very much a leading indicator. What it's selling to the world is something which tells us something about what people feel about what's going to happen perhaps next year.
Hey, is it though, Ian, all about Intel, which is one of its biggest customers? Is that where the problem is?
Yeah, I mean, obviously they're not going to name specific customers and call them out, particularly if things are bad for them. But, passing through the numbers, it's hard to go past the fact that this is probably at least partially Intel's doing, that Intel, as you know, is going to spend a lot less money on plants and equipment because it can't afford to. And that has a real, huge impact on a company like ASML and the chip equipment sector in general.
Ian, one more for you, and then we want to bring in Mackenzie on her NVIDIA scoop from earlier today. When you think about where ASML is in the semiconductor manufacturing process in the universe with these huge, incredible machines, what are the other companies we need to be watching as a result of the news we got from ASML today?
Yeah, I mean, that's a good question. We've seen that happen already. We've seen Applied Materials trade off. We've seen KLA Tenco trade off. We've also seen Lam Research get hit, and we should probably look out for when Asia opens, what's going to happen to Tokyo Electron. These are all companies that are key suppliers of this technology.
As we should point out, 28 names in the Philadelphia Semiconductor Index are lower today, only 2 to the upside. Mackenzie Hawkins, come on in on your scoop here. What do we know? What's the Biden administration seriously considering?
So for the past 2 years since the U.S. first implemented sweeping export controls on advanced semiconductors, a lot of the focus has been on China. And around a year ago, the U.S. actually added trade restrictions to more than 40 additional countries because of concerns that if NVIDIA or AMD or some other AI chip maker sent those chips to places like the United Arab Emirates or Saudi Arabia, they could somehow wind up in Beijing's hands. But over the past couple of months in particular, Biden administration officials have been looking at a range of other national security risks specific to these regions in the Middle East, Central and Southeast Asia, and parts of North Africa. NVIDIA. Things like human rights and surveillance concerns, counterintelligence risks to U.S. intelligence personnel around the world. And they're beginning to think, how high a volume shipments should we allow NVIDIA and other AI chip makers to send to these countries to let them stand up their own AI infrastructure. So the latest development is that they're considering capping the total volume of sales that NVIDIA and its rivals would be able to ship to places like countries in the Persian Gulf.
Are there ways that countries and companies that operate in these countries can get around restrictions such as these by using compute power in other parts of the world?
So these countries are actually trying to stand up massive amounts of compute power themselves. Of course, an AI company can train its models on data centers that aren't located physically next door, but a big part of the Middle East AI push is to actually stand up these data centers. And so they're desperate to import chips from NVIDIA, which is the far and away industry standard, the gold standard, and several generations ahead of any offerings from China. But the US government is not wholesale blocking the sales of these chips. They're saying, okay, you can have these chips so long as you meet certain security requirements of ours in the licensing process. And all of the licenses together won't add up to more than a threshold that we'll have to wait and see if they are able to determine.
It makes me wonder, what about just kind of believing in capital markets, letting companies do what they need to do? I know we've talked a million times with you about national security concerns when it comes to high-tech companies, particularly some of these semiconductors. But I wonder how crippling this could be ultimately for a company like NVIDIA if at the same time, as you guys write in this story, or this as Mackenzie's story, and I know you also worked or gave some input, you've got China and other companies looking to figure out their own NVIDIA.
Yeah, I mean, this is the argument that the companies push back with, which is, look, if you don't allow us to supply them, if you don't allow us that window into what they're doing, A, that hurts your visibility, but B, it doubles their incentive to try harder and to get equivalent products. For now, as Mackenzie just said, NVIDIA is over the horizon in the lead in this particular area, but it keeps cautioning and it keeps telling everybody, including in the White House, look, you need to be aware of the fact that we are giving them an incentive to catch up.
Mackenzie, what's the next bit of this story that our investing audience needs to understand or needs to watch out for? What are you looking out for?
So the big thing is, after months of the Biden administration basically slow walking NVIDIA and other AI chip licenses to countries in the Middle East and elsewhere, but with a primary focus on the Gulf, we're going to be waiting to see whether any of these massive data center licenses are approved. A great example to watch out for is Microsoft's partnership with G42, which is the top AI company in the UAE. Microsoft is investing $1.5 billion. They want to stand up data centers in the UAE and in Kenya, but that's all contingent on getting this license application approval from the U.S. government. And that's one of many licenses that's been held up over the past couple of months, so we'll be waiting to see if that one comes through.
Mackenzie, can we make an assumption this is a Biden administration policy, that this could potentially carry over if there is a Kamala Harris in the White House? Just got about 25 seconds.
I don't think anyone thinks that these chip restrictions are going away, so that's probably a safe bet.
All right, going to leave it there. Hey, guys, thank you so much. Really appreciate it. Mackenzie Hawkins, U.S. Economic and Industrial Policy Reporter at Bloomberg News. Check out our scoop. You can find it on the Bloomberg Terminal and at Bloomberg.com. And, of course, always Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News, out there in our San Francisco bureau. The stocks, though, definitely underperformance in today's session. Tim, still down about 5.5%.
Yeah, taking a look at ASML, ADRs of ASML down 17.5%. Hey, coming up, those cyber robots at that CyberCab event?
With the human assist?
Maybe.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ very much in the red. Worst level of the day right now on the S&P, down 47 points to 58.12, retreating from yesterday's record, down now by about 0.8%. The Dow down 285, down 0.7%. The NASDAQ Composite Index down 210, drop there of 1.1%. Stocks are getting hit. Those disappointing earnings from ASML, Europe's most valuable tech company, and concern about tighter U.S. restrictions on chip sales spur a sell-off in the industry that has powered the bull market. 10-year yield right now, looking at a yield of 4.02%, the 2-year 3.94%, gold up $17 the ounce, up 0.6%, West Texas Intermediate crude down 3.8%, 71.04 a barrel. Again, the S&P down 46, down 0.8%. Former President Donald Trump says his policies will inspire growth despite adding to the debt, as he sought to calm business leaders who worry his economic plans will fuel inflation. It was a wide-ranging conversation with Bloomberg editor-in-chief John Micklethwait on a number of topics, including tax, tariffs, and technology. The former president was also asked about the pending sale of U.S. steel to Japan's Nippon Steel.
It's been a tough business. It was a great business many years ago, and I would not let U.S. steel be sold to Japanese, by the way. It's psychologically, I think it would be.
That's the Nippon Steel, as you know.
Yeah, I wouldn't let it be sold. But I would, I would stop it if it hasn't been completed by the time I'm president.
Former President Donald Trump speaking with Bloomberg editor-in-chief John Micklethwait. Shares of U.S. Steel, they're up 1.7%. ADRs of Nippon Steel down now by 0.3%. Recapping, we got stocks lower, S&P down 0.8%. Cannot ignore the Russell 2000, by the way, up now 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
The Russell up. That's pretty interesting. All right, Charlie, thank you so much. Hey, folks, never miss a Bloomberg Business Week story by becoming a subscriber today, tapping into deep reporting and analysis from our reporters around the world. Get unlimited access to Business Week by heading to Bloomberg.com/subscribe now. This is Bloomberg Business Week.
Well, it's time for another edition of Bloomberg Plugged In. It's your weekly look at EVs, and it's all about last week's Cybercab event, something we talked about yesterday, but we knew we needed to get to the guy who broke the news, which was one of the most read stories on the Bloomberg terminal yesterday. It's about Tesla using humans to remotely control some capabilities of its Optimus robot prototypes at the Cybercab event, designed to generate investor enthusiasm for forthcoming products. That's according to people familiar with the matter. Ed Ludlow and David Welch broke the news. Ed joins us now. He's co-host of Bloomberg Technology on Bloomberg TV, joining us from our San Francisco bureau. Ed, what were these robots doing at this event? And how do you know that they weren't necessarily just human-like?
So there were like 50 Optimus humanoid robots on site at the We Robot event at the Warner Brothers lot, and they were interacting with the guests that were there. And lots of the guests were suspicious and curious about whether they were acting fully autonomously, powered by AI, or if they were being remotely controlled. And actually, many guests posed the question directly to the robots. Some of them were given answers. So, for example, like at the bar, when a robot's pouring a drink, some users, this is based on posts on X, were like, you know, are you doing this yourself? And the answer the robot gives is, no, I'm being assisted by a human. And there was so much speculation. So to answer your question very directly, I phoned up, we call them people familiar with the matter. I phoned up sources at the company, you know, and I got to the direct truth of it. And yes, absolutely, they were teleoperated by Tesla staff who were working remotely in those interactions, and the robots were not operating autonomously.
Was it, in your view or in the view of analysts, in some way, I don't want to use the word misleading because it's a charged word, but I'm wondering how it was presented in the situation, that this was the type of thing that the technology can do, or was it kind of hidden?
Yeah, so this is the plugged in segment, right, where we normally talk about electric vehicles, and vehicles have wheels normally, in the context of cars. The point being that for many, the robo-taxi part of that event was really disappointing and underwhelming. But seeing what those Optimus humanoid robots could do was so exciting for so many people, and kudos to Tesla. It is, we've all seen the film iRobot, right, Will Smith? It was so reminiscent of that. But Elon Musk did not state on stage that there was teleoperation involved. Nor did Tesla's IR team. They do not have a media or press relations team. And so that was the assumption. And so clarification or confirmation through our reporting that it was teleoperation. A lot of people felt misled, partly because the big news or headline is that Elon Musk said, look, this is going to be our biggest product ever. Yeah. And he sort of outlined a future where, like, this thing could be babysitting your children and could cost as little as $20,000. But I think we should get into more detail of what I reported, because my understanding, speaking to that team, is they're very far from that, very far.
Well, I wonder, Ed, I'm thinking as you're telling us about this, I'm thinking back to, I think it was Walter Isaacson's book on Steve Jobs more than a decade ago. And I think in the book, he talked about how at the first Apple iPhone event, they couldn't get the signal bars to actually show that there was a full cell signal coming to the iPhone. So they used some sort of, I don't know if it was Photoshop or, it wasn't a real representation of the iPhone signal. Is this just kind of par for the course when it comes to product launches?
Yeah, let me give you the backstory. About 3 weeks before the event, Elon Musk went to the Optimus team and said, 3 weeks, I want the robots to be there. So it was a last minute thing. And they were at a stage where they'd built many of them. They didn't suddenly need to scramble to build more of them, but the software just wasn't such that the robots could operate and interact of their own artificially intelligent volition. Let's think about it in real terms or basic terms. You have a crowd of people in a staged Hollywood studio environment with flashing lights, noise. The robots are interacting with the crowd. They just hadn't got to that stage yet where it was safe or even possible for the computer vision system on the robot, i.e. the cameras that are built into the robot detecting the world around it, nor the compute to decide what to do, to interact with the guests. Teleoperation was the only option that they had. And the team told Elon Musk that, and they went with it. That's what sources told me, at least. And they've got a long way to go. But there's still remarkable what they did achieve, right? From an engineering standpoint and manufacturing standpoint. And by Musk's own admission, you've heard me say this many times, he's often late, right? In his timeline and his prediction, but he gets there in the end.
Yeah, I think that's what I'm wondering about, right? How many times we joke about he says he's going to do something and it takes much longer, but he gets there. And I'm thinking how wild it's coming after we just, saw, the rocket come back down and be grass. Like, he just does.
Fantastic point.
Right? Like, he gets these things done, Ed. So, I don't know. You follow him, you follow this company, you're talking to the people who are watching what he's doing. Do they think this could ultimately be Elon or Tesla's biggest product?
Yeah, we talked about this on the Elon Inc. podcast, which at the time of speaking, Carol, I don't think is out yet, but it will be. This comparison with Starship, which happened, less than 48 hours later. The fantastic image of the booster going from 14,000 kilometers an hour through Earth's atmosphere, suddenly down to 900 kilometers an hour just before the claw, and then being captured midair by the gantry. It's amazing, right? And that's real. They pushed the field of rocket science literally forward, tangible. But to tie all of that together, Optimus, on the face of it, everyone was really excited because they could see it. And then when they learned that there was teleoperation involved, many sort of investors and analysts that took part in that event were like, this is either the greatest thing we've ever seen, or it's teleoperation. It's one or the other, and it ended up being the latter. And so it just shows that they're not quite there yet at the sort of groundbreaking level. And the whole point, it was an event that was supposed to be about a robo-taxi in a future where Tesla does ride-hailing, not even anything about a humanoid robot.
Well, yeah, that's what I was thinking. Like,
cybercab event.
Look at this flashy thing. Okay, there's a little human assist, but look at this. But oh yeah, and maybe you'll forget that I was supposed to talk about the robo-taxi, which, so I don't know. Where do you go with it then? Do we just wait?
Well, it's serious because the stock fell 10% the following day.
Right.
So you cannot ignore that.
So investors were frustrated. Yeah.
Clearly, well, disappointed. I think frustrated may be a little understatement. What I was told by sources is that Elon actually did a rehearsal of the presentation, and many of the things that he had planned to discuss were cut, or he skipped over them. So, for example, there was going to be some sort of visual representation of this future proprietary ride-hailing app, like the logo or what it would look like. They didn't show that, obviously. There would be more of a discussion about how future iterations of full self-driving would be priced out or integrated into their existing models. We reported that he had planned to talk about full self-driving for their semi-truck. None of this materialized. And, I think that was the frustration because that's what investors wanted to hear about. They wanted a more tangible sense of the business model for a future where they operate a ride-hailing app. We got the cybercab. The piece of news that took everyone by surprise is that you can buy one potentially, but that wasn't in fitting with what we'd heard up to that point.
As opposed to Tesla running the fleet of them?
Exactly so. So the basic idea for quite some time has been a dual fleet. Tesla builds a purpose-built robo-taxi that it owns and operates itself. That is on the ride-hailing app. But all the existing Tesla vehicles that are out there follow the Airbnb model, not the Uber model, the Airbnb model, that when you're not using your Tesla, it has the hardware and software that it can just go off for the day. You say, you know what, I'm not using you today. I submit you to the fleet. It drives itself off and goes and picks up strangers, and you earn money from it. And by announcing that Cybercab could be bought as a consumer or privately owned product, that kind of muddied the waters a little bit in understanding the business model, and was one part of the sort of complication of that Friday morning market session and why the stock fell so much, because people were sort of scratching their head like, we really need to understand a bit more. This is fabulous. Cybercab looks amazing. Like, clearly it worked from the demonstrations. It's a prototype, let's underscore that. But we don't really still see the jump here of where you're going with this.
I'm stuck on the robots. I mean, at 20,000 to 30,000 a pop.
Robots.
I know, Optimus. I mean, is that really going to be a big marketplace?
Excuse me, do you know how much childcare costs?
I know, but still, I mean,
well, brilliant observation, Tim. Brilliant observation. Yeah.
Are you going to let your kids be just like a robot?
Not saying
25
I would let them,
seconds
but...
left here. I mean, is there a huge? I mean, I don't know. I'd like a robot that does my dishes and cleans up.
Well, look, Tesla right now builds EVs for consumers, and forget the Optimus robot. Many say if you're going to offer a cybercab with no wheel or pedals for 20 to 30,000, why not just stick a steering wheel on it and finally give us that cheap EV you used to talk about?
That's a good point.
Bam! Drop the mic. That was perfect. Ed Ludlow, thank you, as always. Of course, Ed Ludlow, co-host of Bloomberg Technology. Catch him and Caroline Hyde, 11 a.m. Wall Street time on Bloomberg TV. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are very close to session lows. We got 19 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ very much in the red. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are under pressure with the Dow currently down 327 points. S&P's dropped 50, while the NASDAQ is down by 1.2%. The U.S. 10-year yield at 4.03%. Gold is higher by 18. Oil is under pressure. And Bitcoin, that's higher by 1.4%. Among the main 11 S&P sectors, leaders were real estate and the financials. Energy and tech were under pressure. And leaders to the upside in the Dow, Boeing and J&J, while UNH fell 7.8% after earnings and led to the downside. Also after earnings, Citigroup fell 5%. Goldman Sachs was little changed, while Schwab rose by 7%. And big news today in the semi-equipment space, ASML plunged after releasing earnings earlier than expected. CLAC fell 15%. Lam Research and AMAT each fell 11%. Wrapping things up, some of the names reporting after the bell tonight include United Airlines and trucker J.B. Hunt. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got 18 minutes to go until we wrap up this trading day on this Tuesday, October 15th. Carol Master along with Tim Stanovic live here in our Bloomberg Interactive Broker Studio. And as Charlie mentioned, as Bill Maloney mentioned, we are seeing stocks hovering near their lows of the session. Taking a look at Trump Media, that stock, too, is down in today's session. I'm just bringing it since we did see our John Micklethwaite have an in-depth conversation from the Chicago Economic Club with the former president, talking about a lot of different policies. And we do see Trump Media down about 14%, so hovering near its lows of the days.
Yeah,
Wow.
interesting. Shares slid as much as 12%. Well, that was an earlier article. It raised
It was down 16% at its lows today. Yeah.
Wow.
Yeah.
And it was briefly halted for volatility.
Yeah.
Okay.
So just interesting. Just on the backdrop of that conversation,
Yeah.
I bring it up, and that's why it is relevant. Let's talk the markets.
Yeah, let's see what Jason Bronchetti has to say, Chief Investment Officer at Lincoln Financial, joining us from Pennsylvania. Jason, good to have you with us this afternoon. How are you watching things? I mean, we hit a new record yesterday for the S&P 500. We're seeing chip stocks really weigh on the trade today. A couple different stories out about that. We talked about that throughout our program. What's the view from your perch?
Yeah, well, first of all, thanks for having me on with you again. It's great to be back with you. And I think, you know, as we think about the market, I mean, today's a choppy day, but the last time I was with you, we were talking a lot about the economy and the market backdrop and kind of where we might be headed. And I think there was a fair amount of debate at the time as to, you know, whether we were going to be in a soft landing or a hard landing, no landing, and what that might mean for markets. And I think if we take a step back and think about where we are today, you know, it looks like we're in this kind of soft landing category, at least for the moment. Growth is still positive, clearly. You know, Q2 GDP coming in over 3%. Q3 is looking about the same. Inflation is Q3 is looking about the same. Inflation is approaching trend, and employment remains pretty healthy. So I think earnings are in focus, obviously, this week and last week. The banks setting a healthy tone. So I think the economic backdrop is looking pretty good. Now we're bound to see some volatility, and that's one of the top things that we've been talking about with folks, particularly as we head into the election here and as the Fed kicks off and continues its easing cycle.
Hey, Jason, you bring up the election. Former President Donald Trump saying his policies would inspire growth despite adding to the debt as he sought to assuage business leaders who worry his economic plans will fuel inflation. He says we're all about growth. He told that to Bloomberg News editor-in-chief John Micklethwaite earlier today, an interview at the Economic Club of Chicago. He says we're going to bring companies back to our country. Is there a Trump factor, though, in the trade? And here we are pretty much just hovering near our lows of the day. Is there some nervousness among investors about what a second term by Donald Trump might be?
I think anytime you're in the throes of a presidential election cycle, you're going to see volatility, and that's what we've seen. If you look back in history, markets tend to be pretty volatile during election years, leading up to the actual presidential election and the outcome there. That being said, what we have seen is that once we get through that, markets tend to be less concerned about the political situation as some of that cloud lifts. So whether it's concern about Trump, whether it's concern about Harris, or what those policies might be, I do think you're right that that's weighing on things, and we would expect to see that volatility and perhaps heightened volatility even up for the next few weeks. But once we get through that, what we've seen historically is really that in all but 4 of the last 24 elections going back to the 1930s, you saw positive returns for the equity markets during presidential election years. And the years in which 3 of those where we didn't have positive returns were those that were marked by crisis in 1932, 2000, 2008. So what I'd say is I'd expect to see more volatility for whatever reason, but once you get through that, wouldn't be surprised to see things firm up as we move forward from there.
Hey, there's, candidates on a campaign trail, and then there's, a president in the White House, and then there's also the Congress that goes along with it. Whether or not it's of the same party or of a different party determines what policies ultimately get done. How do you, who's better for investors? What president come November, come January, is better for investors in your view?
Yeah, I mean, we all have our views, but the reality is, if you look back through history and you look at the 10-year annualized performance in the S&P 500 post an election year, whether a Democrat wins or a Republican wins, the returns have been about the same, about 11.2% annually for when a Democrat wins, about 10.5% when a Republican wins. And that's been the case since World War II. So I think that while we care a lot about politics and we care about the markets, notably near term, I think you're going to see volatility around that. But when you have the likelihood of some degree of divided government, the hard policy shifts are certainly less likely. And I think that that's more than likely the outcome in this case, that regardless of who wins, the clouds will lift, and we'll see pretty positive returns over the long term. And so focus on zooming back out, widening the aperture, and being less focused on any given trade and more focused on what markets have done over the long term.
We're just focused on you like every other person out there who's focused on the folks who live in a swing state, right, Jason, because
there you go.
You're like the most
Pennsylvania.
important.
We're in the hotbed.
Yeah, every 4 years this happens to you, right? Where it's like you turn on the TV and every other ad. I did go to Georgia back in August, Carol, and watched a little local television. Actually, I watched.
I love watching local TV.
Yeah, local TV, national TV. I couldn't get away from the ads. Every other ad was for a political candidate.
I bet,
Swing
right?
state, big money being spent.
Yeah, I mean, absolutely. Right. Well, I don't know. I get what you're saying about historically what happens obviously in election years and coming after it. But when you do have, potentially a candidate who talks about increasing dramatically tariffs on foreign goods, you're a smart guy, tariffs, doesn't that make you a little concerned potentially?
Yeah, look, I mean, I think it's
an all-out trade war, right? Would not be great.
Yeah. I mean, any kind of upheaval in that regard is certainly has the potential to be quite negative or stoke that inflationary impulse as well. I mean, I think when you look at what the Fed has done, we've gotten to a pretty good place in terms of the trajectory around inflation. I think any policies like that would be inflationary certainly should give some cause for concern as far as that goes.
And at the same point, both seem to talk about a lot of spending, right? And you worry about the deficit.
That's what I wonder is I wonder also what the bond market lets them do.
Yeah, exactly.
Yeah, I mean, nobody's really talking seriously about reining in any degree of fiscal spending. And so I think when we think about the short end of the curve, you're likely to see rates come down in the front end, just given the direction of travel with the Fed. And I think that direction is clear, and the pace and the destination are a little bit uncertain. But the policies out there, kind of regardless of who wins, probably have the potential to be a little bit more long-term inflationary. I mean, my friend Henry McVeigh talks about we've been in this marketplace and this economic backdrop of 30 years of benign globalization, inflation coming down, interest rates going lower. I think when you think about the amount of debt that's out there and some of the policy ideas that are being floated, certainly have the possibility of stoking that inflationary impulse and leading longer rates higher over the longer term.
All right, good stuff. Fun to check in with you. Jason Burketti, he's Chief Investment Officer at Lincoln Financial, joining us from Philadelphia, Pennsylvania. All right, folks.
What's next, Carol?
Drive to the close.
Yeah.
Was that a cue?
No, it was a test. You passed.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. Taking a look at stocks right now, off of records yesterday, down 0.7%, the S&P 500. I think that's fair to say. Yeah, the NASDAQ down a full percentage point. Traders, investors getting a little spooked by what we saw from ASML a little earlier in the session today. Preview, that's one of my decliners.
I bet it is. I actually have two chip names that are higher today.
I saw that. So are they the two chips names that are in the stocks that are not lower? Because
that's a good question. I don't think they both. No, they're actually not. Not both of them. I think one of them might be. Yeah, one of them is.
Okay, she's checking her notes in real time.
You do things here. Love my job. So much coming at you. You read a lot of information constantly, and like I literally will do something, and somebody will ask me a question about. It, I'm like, I don't know. Like I move on. That's what we do. We're not moving on yet, though. We are going to walk you down to the close here. We also do have some earnings. As you know, this is a super busy week for earnings season, and so we're going to be breaking down United Airlines. You've got J.B. Hunt, which is a great read, certainly on the transportation sector. So is United in terms of what consumer business travel. United has been on such a run. It's up almost 60% year to date. So we'll be looking at that one as well.
Hey, those planes we've been on have been
A lot of United.
Yeah.
We've done a lot of United.
Because, you know, fly to Newark.
I like that.
United kind of rules.
Home in minutes.
Is it? Are you really?
You know, it's not like
Depends on the time of day
If you
for
fly
me.
to JFK, it can be anywhere from 60 to 120 minutes for me.
That's right. That one time you were.
Well, you never want to land.
Wasn't your drive from JFK home longer than your flight?
I think it was because
I
I was
think
coming in.
You were coming from like the Mid-Atlantic or south.
Nashville, was it or something?
Yeah.
Yeah, I think it was. Yeah,
The drive home was longer than your.
It was
flight.
longer. It was kind of crazy, cray. All right, folks. So we're going to have some earnings. We're going to talk about some of the important sectors. Remember, the bond market was closed yesterday for the Columbus Day holiday, so we'll talk a little bit about that and dig into some of the sector moves that we're seeing. Volatility, though, certainly seems to be the watchword here in an election year. Not surprising, but kind of the market moves pretty quickly on things.
Hey, earlier today, you might have heard on our air or seen on Bloomberg Television, Bloomberg News editor-in-chief John Micklethwaite interviewing former President Donald Trump out there at the Economic Club of Chicago. Among the most read stories on the Bloomberg terminal includes a write-up of that, with former President Donald Trump saying that his policies would inspire growth despite adding to the debt, as he sought to assuage business leaders who worry that his economic plans will fuel inflation.
Yeah, it's something we just talked about with our market guest specifically, and whether the implications. He didn't seem to be too concerned. You know, shared with us some numbers about what happens in an election year. As he reminded us, as we like to remind everybody, a lot of it has to do with what we see in terms of a Congress and whether or not.
Yeah, what would he be able to do?
Yeah, exactly. So, yeah, kind of interesting.
Very. Do you think? Well, the other part of this too is, and our editor-in-chief John Micklethwaite was clear to point this out, that they invited Kamala Harris to do an interview as well. It remains to be seen what happens in the final stretch of the election in terms of the media that these two are doing.
Yeah.
I think it's really interesting to see that. You really see the rise of these niche podcasts making a point right now. The big question is, you know, who goes on Joe Rogan? When do they go on Joe Rogan? That's kind of the outlier here.
Well, and I think what's interesting is the race to the finish line, right? Just a few weeks away in terms of everybody going to the polls. Of course, early voting has started in some states. But having said that, I think it's very interesting to see the media barrage, which we normally see as it gets closer to voting day. But it's interesting to see the different places that people are speaking. And I think really thinking about the voters that they need to either inspire, get to the polls, or win over in these last few weeks. And a lot of that is about that.
We'll find out what worked and what didn't work over the next 3 weeks, maybe, if we do see a result on the day after Election Day.
Yeah, exactly.
How long is it going to take to count these ballots?
All right, do not go anywhere, folks. We are counting down to the closing bell. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, the closing bell starting right now.
Minutes down to the close.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic with Scarlet Fu taking you through the Closing Bell, a global simulcast. It starts right now. Carol Master and Tim Stenovic joining us from the radio booth. Alex Steele is off today. We welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Quite a turnaround, Carol, from what we saw yesterday when more than 400 S&P stocks helped to lift this market to another record high. All of those gains given back today.
Yeah, no records today, that's for sure. It is kind of a mixed bag, though, if you look at the S&P 500. But something I'm assuming you guys have been talking a lot about, we have too, is what, Tim, is going on in the semiconductor space.
Yeah, we're seeing the stocks down right now more than 5%. The biggest decline going back a couple of months. A big part of that has to do with what ASML said a little earlier in the session today, sort of early releasing those numbers that they were set to release tomorrow and kind of sending some chills across the industry.
Some chills given that investors are way extended when it comes to equities, right? Global investor optimism posting its biggest increase since June of 2020, according to the latest Bank of America Global Fund Manager survey.
Yeah, and we talk about this idea of like where the allocations go next here. Is this going to be predicated on the back of the support from earnings, and the earnings that, let's face it, are still projected to be relatively good, at least on a percentage growth basis. Now, the idea is that whether that commentary going forward for the fourth quarter in 2025 disappoints, but so far, I know it's still incredibly early, but so far, so good. We get the closing bells here in New York. Let's walk you through the numbers. Pretty much a similar story to what we saw yesterday, but just kind of the flip side of that. With red across the screen, similar declines across the board, with the Dow Jones Industrial Average lower by more than 300 points, or about 0.8%. The S&P 500 also down roughly about 7 to 0.8%, while the NASDAQ Composite is going to close out the day down 1%. The NASDAQ 100 down 1.4%. And we did see a little bit of strength for a good portion of the day in the mid-caps and in the Russell 2000, but that faded as we got closer to the closing bells. The Russell 2000, we're just going to call it unchanged on the day. Green on the screen, if you will, Carol Master, but only by about 1 point.
Yeah, but definitely a bit of an outperformer there compared with some of the larger cap indices. Having said that, the S&P 500 remain kind of an even split, 244 names to the upside, and you've got 258 to the downside, and it's earnings season, and you've got United crossing the Bloomberg.
All right, United Airlines third quarter adjusted EPS comes in above estimates at $3.33. Estimates were for $3.07. The United third quarter available seat miles coming in just above estimates at 81.54 billion. Operating revenue coming in at $14.84 billion, above the $14.72 billion. Shares, though, right now down by about 1.3%.
And I'm also looking at the forecast for this quarter. Fourth quarter adjusted EPS will be anywhere from $2.50 to $3. The consensus estimate is smack right in the middle of $2.75. United also sees full year adjusted CapEx, its capital expenditures, below $6.5 billion. Analysts were looking for somewhere in the neighborhood of $6.33 billion. And United says that it will initiate a $1.5 billion stock buyback program. That is the first since 2020.
All right, we're also getting some results out of Interactive Brokers. Total net interest income, the main metric people pay attention to, up about 9% year over year, though that is slightly below street estimates. They were looking for about $823 million. They gave them about $802 on the nose here. Adjusted EPS also missing $1.75 versus a street estimate of $1.82, and top line revenue for the most recent quarter, we'll call it in line, $1.33 billion. Street was looking for $1.34 here. Total customer accounts right now in line with estimates at 3.12 million.
Yeah, and this stock's been on a tear this year. It's up more than 85%. It hit an all-time high in today's session. You're seeing that stock down about 4%. Digging a little bit deeper, you've got average customer credit balances up 12% year over year. Average customer margin loans, they are up about 28% year over year. So a little bit more in terms of what they're seeing on their platform.
All right, I'm watching what's going on over at United. The company did report a third quarter profit that came ahead of Wall Street's estimates, a sign that the company is bouncing back from those fare discounts that squeezed many carriers over the summer. To rehash some of these numbers, the share's down 0.8% as we speak. Adjusted profit, though, came in at $3.33 a share. United said, topping the $3.07 average analyst estimates compiled by Bloomberg. Also, as Scarlett said, that new $1.5 billion share buyback, including as much as $500 million just this year.
Kind of interesting. They're calling this their busiest third quarter, at least when you measure it by passenger volumes and the revenue associated with that. They talk a lot in this earnings release, which I think is interesting, about the so-called customer experience and some of the things that they're trying to do, I guess, to make things a little bit better, not necessarily on the plane, but actually at the airport and in their lounges themselves. Lounges, I should point out, that have a lot of work to do. Just saying.
Go on.
Romain's a little bitter that he can't get into the lounges. We've talked about this. It's only if you have the credit card, the co-branded credit cards, because
I don't know. You need like the secret knock, the secret handshake. I don't know. I don't know. I got to pay.
It's gotten a little crazy about who they let in, right? Whether it's the credit card, whether it's a certain kind of flight, it gets a little nutty.
Yeah, absolutely.
Or maybe they just don't want you, Romain.
Pretty much. I think that's it.
I think they want to create different experiences for people, and everyone's trying to chase a premium passenger. I mean, Delta has really done a good job with that, and everyone else is trying to do the same. And the discount carriers are the ones kind of left battling it out. And we've seen what's happened with Frontier, with Spirit, with Southwest, for that matter.
So they opened the Reset Suite by Therabody. I got one of those little. I got one of those little Theraguns now. So maybe does that get me in? Do I just show the Theragun? This is
I don't know what you're talking about.
Yeah. I mean, Tim, what are you talking about? I know you probably spend all day in the Therabody.
Hey,
go ahead.
I don't get to spend any time at that part of the airport. That's the problem.
Oh, okay. What are you flying private or what? What's happening? Okay. Well, anyway, when we go back to the earnings and this idea here, in all seriousness, we talk about this sort of that uptick in passenger revenue, and we saw something similar out of the results that we got last week. We see it today in United, and we'll see if that carries over to some of the other airlines. Certainly with American, God only knows what the heck's going on with Southwest and JetBlue.
I will say that Barclays, let me get it out there, raised its price target on United Airlines just yesterday to 66 from 60. So we did see the stock close at 64 in today's session, noting that results could beat forecasts given lower fuel prices. This is coming from the fly. So we are seeing, we'll look for some commentary on that. Another one crossing.
Okay, just looking up JB Hunt right now on the Bloomberg Terminal shares in the after hours right now. Just pulling it up, excuse me, shares in the after hours right now are higher after the company reported results, up by more than 4.2%. The company reporting, just pulling it up here, sorry guys, a little slow. Third quarter revenue that came in at $3.07 billion, beating estimates of $3.01 billion. Third quarter EPS coming in at $1.49. Estimates were for $1.39. Shares higher in the after hours.
Yeah, intermodal revenue, $1.56 billion, beating the consensus estimate, and dedicated revenue, $846 million, trailing the consensus estimate of $857 million. Keep in mind, this is a stock that's down about 11% this year.
I see you're very broken up by this,
I am,
Charlotte.
sorry.
Absolutely. You know, but it gives you the question too. I always love looking at these because you kind of get a better sense.
Are you taking care of your co-host?
No, but we get a better sense of kind of this idea of kind of where economic activity is. Obviously, you get a taste of that with the trucking companies. And I thought it was interesting because we came into today and there were a couple of reports by the National Retail Federation and a couple others about some concerns that holiday spending might be a little bit lighter than what it was last year. And so you start to think about where the goods are, what we're buying, and of course we had those results out of luxury handbag maker LVMH not doing good. Of course, that's more of a China story, but the question is how does that feed back into the U.S. economy?
Yeah, I mean, the big question is what JB Hunt says about the current quarter and the outlook given, you know, the upcoming seasonal shopping period and what retailers are doing in terms of their ordering. Some people will say that they're done with the destocking inventories, but then we also know that a lot of them had overstocked because of anticipation that there would be a port strike. We did get that for 3 days, and if it had continued, it would have been a benefit to JB Hunt, but it so far has been resolved, or at least they're no longer striking, and it may be resolved soon.
Hey, just go back to United, United, which is up in the aftermarket, up about 1.6%. Looking at Delta, it's up about 0.6%. Americans up about 0.7%. JetBlue, meantime, just up about a fraction, about 1/10%. But again, we continue to see United gaining some ground here.
What's your favorite airline, Carol Master?
She loves them all.
I love getting on airplanes. I just think it's like the coolest. I absolutely love. I love going places. I love it. I don't know. I
can tell you which one's my favorite.
I like a clean one. That's what I like.
Yes. You're not brand specific in that way then.
No.
Mine is the least expensive one where I'm still allowed to bring a bag.
No, can I tell you, Tim, when we are,
those exist anymore.
when we are flying somewhere, he like checks to see what we're going to be flying. Like we go through this whole process.
Well, whether it's Airbus or Boeing, you mean?
Yes.
You got to see.
Oh, you're one of those guys.
You got to see what kind of seat you're going to have.
Want to know if they're a new plane?
That's all right. I did this. In fairness, I did the same thing. I booked a flight this morning, and they gave me two options. One was like on some tiny Embraer jet, and the other was like a Boeing 7 whatever. And I was like, I'm going to take the bigger plane.
I should have done that because I flew back this morning on a red eye from California. I ended up in the area right ahead of the bulkhead where I couldn't recline my seat. So on a red eye flight and not able to recline, it was horrible.
So what'd you do? You just stared.
I thought about it every time I needed to sleep.
Scarlett.
Did you like just stare at the back of your seat like David Cuddy for the whole flight and just? Oh, okay.
Finley,
I'm just impressed.
It's like herding cats today.
Even
I'm just
here
telling
today
you.
after a red eye from the West Coast.
We have no producers today.
Yes,
we run the show.
All right, we're closing the mics, everybody. That's a wrap. Our cross-platform on radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. A lot of news when it comes to the ESG world today. Okay, on the environmental side, back-to-back hurricanes, Helene and Milton, expected to cost insurers $35 billion to $55 billion. That's according to Moody's RMS risk modeling unit. Then there's the social side.
Right.
The S in ESG, in case anybody's keeping track. Stellantis hauling employees back to the office, walking back a work from home policy. Then I got a governance headline for you, too.
You're
See what
covering
I'm
all the
doing there?
grounds. I like that.
Boeing preparing to raise as much as $25 billion in debt and equity, giving the plane maker the financial resources to withstand that strike and work its way through a series of operational setbacks. All of these headlines, by the way, courtesy of the great ESG Daily newsletter from Bloomberg News. You can sign up for that on the Bloomberg terminal.
I got to say, every day when you read in on the top, we have a bunch of stories. Well, this is Jade Wong's world. She's Chief Investment Officer at Calvert Research and Management, a Morgan Stanley-owned firm that focuses on ESG and so-called responsible investments. She joins us right here in our Bloomberg Interactive Brokers studio. Really nice to have you here with us. We have talked about ESG. I feel like, I'm trying to think how old the industry now is, but for a long time. But it does feel like it's going through a growing up period, an evolution, if you will. All the rage in 2020, 2021 fell out of favor in 2022. How would you characterize it right now?
I think it's a period of opportunity for responsible investors who are really focused on integrating financially material ESG factors into their investment. There was a period, as you say, when it was kind of the hot topic. And so lots of firms were jumping in to get into and take advantage of that interest. And I think the firms that are genuinely integrating ESG insights that are financially material because it's good for the investments that they're looking at are the ones who are going to continue to do that. And so Calvert is in that situation. We've been doing responsible investing.
You guys were kind of out there in front early on.
Yep, we've been around since over 40 years now, and have always been focused on responsible investing. It is all that we do. So we have a large team entirely focused on understanding and determining the financial materiality, and that I think is a really important part.
Isn't
of
that
what we
though?
do.
I think we got away from it. Forgive me, because I feel like ESG got messed up with green or doing good completely. And I think the whole point is you have to look at a company and what are their risks from environmental factors, right? From social, like governance. That's what this is about.
That's what this is about, exactly. I mean, it's really understanding the industry, understanding the company, and really understanding what are the ESG risks that are going to make a difference in that company's performance over the long term. So it's not necessarily just the recycling that they do, but really how are they treating their people? How are they managing their energy? You know, all of those factors that really make a difference over the long term.
What is ESG versus quote unquote responsible investing? Like, what's the distinction between the two? In your world?
In our world, I think it's nomenclature. Responsible investing for us is the way that we've always kind of talked about it, because we take the approach where we're not just looking at, there's much more beyond just the E, the S, and the G, right? We also do corporate engagement. We also vote our proxies a certain way that are in line with responsible investment criteria as well.
But what does responsible mean? Is it responsible to climate change and making sure it doesn't get worse, or is it responsible to investors and making sure that the steps that the company takes is thinking about shareholder value and doesn't do anything financially that harms that?
First and foremost, it's always fiduciary duty, right? Okay. We are focused on delivering value to our shareholders. I think responsible also means that we're also considering multiple stakeholders in addition to our investors, right? You want to be responsible to the communities that companies are operating, and you want to make sure that those companies are treating their employees well. But all of those issues matter because they will, over the long term, be able to deliver long-term value creation for shareholders.
One area that I think, and Carol knows I'm a broken record about this, but just United Airlines, for example, we just reported on what they did in the most recent quarter, how the outlook looks. We talked about the $1.5 billion buyback. We talked about adjusted earnings per share for the third quarter. We didn't talk about how much sustainable aviation fuel the company used. We didn't talk about their net performance score with their customers. We didn't talk about how employees are feeling about working at the company. Because in our world,
you talk about you
that doesn't seem like it moves the company's stock.
So we're long-term investors, and I think that many of the issues that you kind of just cited that you didn't talk about briefly on your show are the factors that actually we are focused on, right? Because, for example, if you don't have strong human capital management, how are you going to retain the best talent? And over the long term, that turnover has a cost, strikes, all of those things, right? But it's over the long term where you're going to be able to kind of see that play out into stock performance or into, the company's bottom line. There has been a lot of research that we've done specifically around what are the material ESG factors and how do they interplay with equity upside and equity returns. And it proves out the consideration that is key is the financial materiality aspect.
So, all right, so tell us about investor interest and the money flows coming in. I mean, institutional interest as ESG has kind of gone through its cycles and growing up period, it feels like.
Yeah, I mean, we're still seeing strong interest, particularly globally. I think that a lot of the focus, obviously, within the U.S., there has been a little bit more of a pullback. It's certainly not as strong as you're alluding the last couple of years.
Yeah.
But I would say that globally, there's a big surge of interest, definitely in Europe, even more so in Asia. And there are different pockets of, I'd say, the country that are still very much driven by, or compelled by responsible investing. Certainly millennials, as that wealth kind of accumulates,
right,
there is also kind of this interest in, hey, I want to make money, but I also want to take care of the planet. I want to be able to treat people well. And so those kind of are more integrated in how they're thinking about investing.
You mentioned, Jade, that the ESG screening process, that's in the DNA of the company. Something also in the DNA of the company is the firm's women's principles. And it's the 20th anniversary of that. Help us understand what exactly that is and what that entails.
Sure. So the Calvert's Women's Principles were the first gender-based investment principles that were focused exclusively on promoting, advancing, protecting, investing in women in the workplace. And so they were created in 2004.
Can't believe that was 20 years ago.
20 years ago, I know. And they were actually the forerunners for the women's empowerment principles introduced by the United Nations in 2010. So they really represent to corporations a framework, a code of conduct on how you can retain, attract women in your workforce. That was how it was initiated, created 20 years ago. But today, I would say that there's a much broader impact in that it continues to serve as a guideline for how do you manage people in general, right? Like how do you attract the best talent in what is an increasingly diverse talent pool?
Is it a screen also?
No, it's a set of principles that are, really multifaceted. So, for example, it will one component is on employment and compensation. Another is around health, safety, and freedom of violence. Right. So, really focusing on creating a culture that is.
Should it be a screen for companies? 10 seconds.
I think it is an important framework for investors, particularly to really understand how companies are managing their human capital.
Cool stuff. Jade, thank you so much. Jade Wong, she's Chief Investment Officer over at Calvert Research and Management, joining us right here in our interactive broker studio. Carol Master, Tim Stanovic, and this is Bloomberg Business Week.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. Shares of United Airlines are higher. The UAL reporting a third quarter profit ahead of Wall Street expectations and a sign the company is bouncing back from widespread fare discounts that squeezed many carriers this summer. After hours, we've got UAL up now by about 0.7%. It was a down day on Wall Street with the Dow, the S&P, and NASDAQ all retreating from yesterday's records. Stocks got hit as a disappointing outlook from Europe's most valuable tech company and concern about tighter U.S. restrictions on chip sales spurred a sell-off in the industry that has powered the bull market. The Dow, the S&P, NASDAQ all in the red today, with the S&P down 44, down 0.8%. The Dow also down by about 0.8%, down 325 points. NASDAQ down 187, a decline of 1%. But the Russell 2000 index of small cap shares managed to eke out a gain of just under 0.1%. 10-year 4.03%, with the 2-year 3.95%. Spot gold up $12 the ounce to $26.60. That is a gain of 0.5%. And a big retreat for crude oil today. West Texas Intermediate down 4%, $70.91 a barrel. So again, recapping, the Dow, the S&P, NASDAQ all lower. Russell 2000 eked out a gain, but we had the S&P down 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. Freedom of speech may be protected in the U.S. by the First Amendment, but it's still something that's the focus of much attention, thanks to the proliferation of misinformation on digital platforms, what's been happening on college campuses in the wake of the Israel-Hamas war, and what we regularly hear from politicians. State and federal officials, for example, already grappling with back-to-back hurricanes that have killed hundreds across the Southeast. They've been with another disaster-related threat, disinformation over their relief efforts and the cause of the storm. Conspiracy theories, hate speech, especially on X after Hurricane Helene devastated a region, with former President Donald Trump and Elon Musk amplifying unverified allegations.
You mean like weather forecasters making up the storm?
Or controlling the weather.
Or controlling the weather.
Or the response from FEMA, and FEMA having to move out of an area because of threats from a militia. This is a world our next guest understands quite well, at least the dissemination of information and what free speech is versus what fearless speech is. Marianne Franks is a professor in intellectual property technology and civil rights law at George Washington University. She's testified on Capitol Hill on the connection between censorship and small business. She's got a new book out. It's called Fearless Speech, Breaking Free from the First Amendment. She joins us from Washington, D.C. Professor, good to have you with us. I want to just read from your prologue, because you argue that your new book takes speech seriously. It's about speech first and the First Amendment second. You argue that the dysfunction of the current American free speech discourse, what I just spoke about, can be attributed to the inversion of that order. What do you mean?
What I mean by that is that we have this incredibly narrow, very legalistic, really reductionist, largely incoherent idea about what freedom of speech is that's based on perceptions and misperceptions of a legal doctrine, of course, the First Amendment. And when we really think about what is important in a democracy, the kinds of hard questions we have to ask about what kinds of speech should be promoted and what kinds of speech should be punished, we need a much richer and more nuanced understanding of speech than you can get from that legal doctrine.
All right, so what is your definition of freedom of speech?
The definition I would use is to say the most important thing for a democracy, that is the most vital kinds of speech that you would want to protect in a democracy, are going to be those kinds of speech that the ancient Greeks referred to as parousia, fearless speech. And the way that they described that really essential form of speech was that you had to be someone who was speaking truly as their own identity, so not trying to cover themselves in some kind of performance or try to disavow some distance between them and their speech. And you had to speak courageously in a critical way about something or someone who was more powerful than you. And the risk that you would be taking in speaking that kind of truth would be to yourself as opposed to trying to cause harm to others.
You know, you say this, and what actually comes to mind is the way that Senator J.D. Vance has answered the question about whether or not Donald Trump won the 2020 election. He's done it over and over again. A couple weeks ago in the vice presidential debate with Tim Walz, governor of Minnesota, and then also most recently with the New York Times when he was asked, I believe, 4 times whether or not Trump won the 2020 election. And his answer was always the same. I'm focused on the future, not necessarily answering the question. He's focused on censorship and what tech platforms did when it comes to censorship. Is he doing fearless speech there?
He's definitely not doing fearless speech there, and he's also misstating what censorship is. And this is one of the reasons why I wrote the book, is that, for all the problems, and I do highlight a lot of the problems with the First Amendment doctrine, we still want to be accurate about what it actually says. And what it's very clear about is that censorship means when the government is trying to make private individuals say something they don't want to say, or is punishing them for something that they've said. Social media platforms making decisions about what they want on their platform or not is not censorship. It does not violate the First Amendment. I think he does know that, and he's trying deliberately to create misinformation about the First Amendment itself.
So when it comes to policing platforms, then, what is your thoughts on social media? Is it media? Is it playful? We know it's dangerous. We've done a lot of reporting on that. But it's also a place where a lot of folks get their news, something that we are involved in on a daily basis. So, newspapers, magazines, things were policed. Traditional media, linear television, if we had said something wrong in the past, we had to correct it. Or there might be a lawsuit, or somebody would make a phone call. We still correct it. So I'm just curious, but it feels like, social media is the wild, wild west. So I don't know. Does it need to be policed? And I'm just curious how you think about that.
Well, it depends a lot on what the outcomes are that we want from those platforms. When we say we go there for entertainment, we go there for news, if we care about those spaces in that way, then we need to have the kinds of rules or the kinds of standards or the kinds of design to make those outcomes happen, because that kind of speech doesn't just happen by itself. You don't get to good conversations, entertaining conversations, high-value conversations by just letting everybody do whatever they might want to do, because that isn't actually a free speech protected position. What you'll get is a bunch of chaos. You'll get a lot of people who are saying really provocative, stupid, uninformed, really outrageous things, and they will drown out everybody else. So if you want quality speech, if you want accurate speech, you have to have some kinds of standards in play. And every platform knows this because they all have standards in play. There are standards against spam. There are standards against all kinds of rules of privacy regulations, any number of things that every platform is already engaged in. The question is, are you going to wield that power wisely? And are you going to do it in a transparent way? And are you going to take responsibility for the things you leave up as well as for the things that you take down?
I mean, we know how some platforms treat this stuff because of what's happened on X in the last couple of years. But I also think about incentives and the way that incentives could be misaligned right now. You can get paid on platforms by views. So your incentive is to create something that people will see. People see stuff when the algorithm sees that people are interacting with it, leaving comments on it, reposting it. Then it surfaces it in other people's feeds, whether that's true or not. It doesn't seem like the system is designed to reward what you refer to as fearless speech.
Definitely not. And that shouldn't be surprising, because what we often forget, and partly because the tech industry and major players in the tech industry try to make us forget this, is that this isn't the public square. This isn't some sort of democracy experiment. This is a corporation that has a product, and it's trying to sell you that product, and it's trying to tell you that what you're doing by speaking or posting or whatever it is freedom of speech, but all it is from the corporation's perspective is profit. And so the only real standard that is being used in those cases is what's going to make that company profit. And so, of course, it's not going to align with democracy. Of course, it's not going to align with high-quality content. It's not even going to have the regular guardrails, as you mentioned, of newspapers, radio stations, TV stations, all of whom have to take responsibility when there is false information on them. When, you know that the New York Times can get sued. We know that Fox News can get sued if there's outright false statements being broadcast. So why is it that the tech industry gets this pass where they're allowed to do whatever they would like or do nothing, and allow disinformation, misinformation, truly harmful content to simply proliferate simply because it lines their pockets?
I'm curious about what you think about the protests that we've seen on universities and campuses. over the last year or so as a result of...
You're at George Washington University School of Law.
You are at, the Hamas attack on Israel, and then obviously Israel's response. And so it felt like freedom of speech was certainly being questioned or maybe not allowed equally. So help us with that one, because that was certainly problematic. As we know, a lot of university heads are no longer there as a result.
Yes.
So walk us through your thinking about that and how it might apply.
I think the first thing to note about that conflict, and I say conflict because it's ongoing, right? That this is something that campuses are struggling with right now, is to say that this should be proof in the first instance that the First Amendment doesn't help us here. It doesn't resolve these questions. You can invoke free speech all you want. You can invoke the First Amendment, but it's not actually going to answer the question of what kind of community do you want to have at any given university? And what are the kinds of threats to that kind of community that you should be focused on? And what I think was really tragic about so much of the demonstration activity that happened in the last few months and the responses by universities is that they, in some ways, looked over their own communities and were speaking to, I think, audiences that were more like members of Congress, or maybe the donors, or maybe the media, but they weren't speaking to their students. They weren't speaking to their own communities and hearing what people were trying to communicate. And of course, the things they're trying to communicate are controversial, they are complex, they can be misinterpreted, they can be rightly interpreted in ways that are maybe concerning. But what you really should have seen from these universities is some leadership about their own community and some grace and some generosity for the students as they struggle through incredibly complex, fraught issues. That's the kind of leadership that I really wish we had seen, as opposed to grandstanding for donors, members of Congress, and others who were trying to weaponize those demonstrations to make their own political points.
All right, we're going to continue with Marianne Franks. She's professor in intellectual property, technology, and civil rights law at George Washington University. She's got a new book out. It's called Fearless Speech, Breaking Free from the First Amendment. So we'll continue in just a moment. Meantime, we've got some headlines crossing the Bloomberg.
Yeah, Tom Brady gets NFL approval to buy a stake in the Las Vegas Raiders. Our own Randall Williams reporting that after months of tweaking the deal, NFL owners voted to approve Tom Brady and Knighthead Capital Management co-founder Tom Wagner buying a 10% stake in the Las Vegas Raiders.
Yeah, deal had been in the works since May of 2023, so over a year, stalled due to concerns over the valuation discount given by Raiders owner Mark Davis. While both Brady and Wagner are still buying at a discount, the duo have upped their offer significantly, according to people familiar with the matter. So I'm not sure that we've got any numbers here, but it is interesting.
I got some numbers for you.
Oh, about how much Brady has made?
Yeah. How about $332 million over the course of his 23-year career? He's also going to earn $375 million over the course of 10 years over his broadcasting deal with Fox.
That's real money. Brady, by the way, expected to have a significant role in decision-making around the team, according to those in the know. So you can read all about this. Just head to Bloomberg.com. All right, Tim and I are coming back with Marianne Franks. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a down Tuesday. The Dow, the S&P, NASDAQ ending the session very much in the red. Stocks getting hit as disappointing earnings from Europe's most valuable tech company, ASML, down 16% today. Also, concern about tighter U.S. restrictions on chip sales all spurred a sell-off in the industry that has been powering the bull market. Today, the S&P 500 index did decline. We saw the S&P down 44 to 58.15, retreating from a record, down 0.8%. The Dow down 324, down 0.7%. NASDAQ lower today by 1%, but the Russell 2000 eked out a gain of just under 0.1%. 10-year 4.03%, the 2-year 3.94%. Gold up 0.5%, 26.62 the ounce, and West Texas Intermediate crude down 3.9%, 70.98 for a barrel of WTI crude. As for the economic backdrop today, we did see the Dow, the S&P, NASDAQ declining with the 10-year 4.03%, the 2-year 3.94%. So again, recapping, the Dow, the S&P, NASDAQ all lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I want to get right back to Marianne Franks, professor in intellectual property technology and civil rights law at George Washington University. She's got a new book out, Fearless Speech, Breaking Free from the First Amendment. She joins us once again from Washington, D.C. The theme of burning is a big part of your book, Fearless Speech, Professor. Burning crosses, burning women, burning books, burning down the public square, and then finally you conclude with choosing your own way to burn. Why is that omnipresent in your book?
For multiple reasons, but one of the main ones is the scene that I opened the introduction of the book with, which is the burning of the press, the newspaper, a newspaper called the Memphis Free Speech, and it was Ida Wells's newspaper, and it was burned to the ground after she published an editorial that she had written about the truth about lynching. And it was a moment where I thought, this is really a repeating theme throughout American history. We have this belief, this mythology about the First Amendment that we protect radical speech and we protect dissidents. And then you look back to the people who have spoken out against slavery. You look back at the people who were speaking out against lynching. You look at the women who are fighting for the right to vote. You look at the moments now in terms of Black Lives Matter protests and the Me Too movement. And you see that time and time again, the mob has come for those individuals. They have suppressed that speech. It's been violently suppressed in a way that sometimes took the form of literal burning of newspapers, but sometimes took the form of incredibly onerous lawsuits or persecutions in other ways. So time and again, those who are trying to be most fearless in their speech have been suppressed, they have been violated, they've been assaulted, and that's really a theme that I wanted to emphasize in the book.
You know, just in your intro to, you know, you say unfettered free speech does indeed exist, but only for some Americans. Today in America, delusional stalkers have a First Amendment right to terrorize their victims. Pornographers have a First Amendment right to glorify sexual violence for profit. Businesses have a First Amendment right to deny services to gay people and to advertise this fact. Anti-abortion zealots have a First Amendment right to mislead pregnant women with fake pregnancy clinics. It goes on and on and on. So it is interesting. This is such a tough one. So what's the answer? What's the way forward? How do we preserve what is so a part of our American culture, right? Of being able to say anything, you know, but how can we kind of preserve that but have the right guardrails? Or can we not?
I think we can, and I think it starts with acknowledging that we've never done it. I think it starts with acknowledging that this is our whole mythology about the First Amendment, the mythology about our country generally, has always been, at best, an aspirational idea. It's never been a completed project. So for the First Amendment specifically, for the question of free speech, we really have to be confrontational about how throughout our history, the First Amendment has not stood up for free expression, at least not for those who were speaking out against the most powerful parts of society. it has shown up for the people who are the enemies in some ways of democracy and of those who are trying to be egalitarian and progressive. So what we have to do first is we have to admit that. We have to stop telling ourselves this bedtime story about the First Amendment, that we've always protected free speech, and acknowledge and really grapple with the fact that we haven't. We have chosen winners and losers for the First Amendment. The moment we admit that, then we can have an honest discussion about what belongs in that part of the First Amendment that says it should be most protected, and what belongs in that part that most of us would agree should be something that we're allowed to regulate. Fraud, if we think about defamation to some extent, if we think about the kind of food and drug labeling misinformation that you might look about, if there weren't any kinds of protocols for those kinds of issues, we need to think about and be honest about the fact that we've always made assessments about harm and speech and injury. And let's talk about how we can do that in the fairest, most transparent way, and really think about the context that we're speaking in and care about the harm, not just abstract harms, but actual harms like the one we've been talking about all this time. That is, there are people who are going to die because of misinformation.
Let me ask you so then, is it the Supreme Court who figures that out?
I wish I could say that we should have any confidence in the Supreme Court to do that. I don't think they're going to figure that out anytime soon. But that doesn't mean that the people can't figure these things out. The one takeaway here about the First Amendment being neither necessary nor sufficient for freedom of speech is that we can do free speech, we can do fearless speech without waiting on the Supreme Court, without waiting for the law to change. We can actually lift up, amplify, highlight those people who have taken those risks even though they had no protections, and we can make those people at the center of our discourse, and we can model ourselves after them.
Professor, what's the link between Americans' trust in media, or a lack thereof, and the misunderstanding of the First Amendment in your view? I'm thinking of a report from Gallup that came out just yesterday that says that trust in media remains at a low, with only 31% of Americans expressing a, quote, great deal or fair amount of confidence that the media will report the news fully, accurately, and fairly.
I think it is a sign that we have, at least two competing problems, or at least two problems that are contributing to this. And one is just a general lack of First Amendment literacy in our public, right? We don't have really good education about what the First Amendment actually does and what it's supposed to protect, because we're losing out on that clarity. The few parts of the First Amendment that really are clear say that you've got to make sure that the government isn't trying to throttle the media. You've got to make sure that members of Congress aren't trying to intimidate researchers. Those are the things that actually are quite clear and quite good about the First Amendment. And if we could get clarity on those, then we could understand why it's so frightening that the government is trying to take hold of media and social media in all these different ways. But that's partly, a lesson for the media writ large too, which is help educate the public about what the First Amendment does and doesn't do.
What hope do you have that things change?
I have hope that things can change because we are at a very dangerous moment in history, but we have had these kinds of moments before. And there have been people who have been willing to stand up, to say the things that are really hard, to act in a way that is against their own self-interest, and to try to rescue democracy and to make that promise of equality become a reality rather than just an empty promise. And so I do still have hope for that because I still have hope in people.
I don't know.
You don't seem optimistic, Carol.
Speaking of speech, I feel a little speechless because I think it's such a big discussion of our time, right? In terms of, we talk so much about free speech, and that means people can say things that you don't agree with or can be uncomfortable. I don't know, though, if there's a line that I think you can cross, obviously, when it creates harm, that is it, should it still be protected? I guess I would say no, but
yeah, and I think the way that just the speed at which speech travels now is so fast because of the technology
and the velocity
that we have in our
of
pockets
it, right?
that we're exactly. Yeah, that's exactly right.
Well, Marianne gave us a lot to think about. Timely, certainly, as we, we're thick in the minute, like in the thick of it, and try to be so careful about the information, certainly, that we talk about, right? And so careful, but that's not the case everywhere in the world. Marianne Franks, professor in intellectual property technology, civil rights law at George Washington University. Her new book, check it out, Fearless Speech, Breaking Free from the First Amendment. If you missed any of it, catch it on our podcast feed. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week, and if you never want to miss a Bloomberg Business Week story, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Check out our offers right now on Bloomberg.com/subscribe now.
Cover story right now is Kamala Harris, what maybe a White House would look like. And a previous issue was an interview that our Brad Stone and our political team went down to Mar-a-Lago and talked with him about his policies. And of course, we just saw our John Micklethwaite earlier today sitting down with Donald Trump too, and to talk a little bit more about that.
3 weeks to go, Carol.
Unbelievable.
And then no news.
No news.
Yeah,
Oh,
no news.
Everybody just like packs up,
everyone
packs
goes
up
on
the
vacation.
camper and goes home.
Yep.
Hey, listen, one story we didn't get to and we really wanted to is about pandas. They are back in D.C.
Yeah, 2 giant pandas yesterday began their journey from China to Washington, D.C. It was nearly a year after Chinese authorities took back a previous pair and prompted fears that the National Zoo would never see the much-beloved animals again. We got some video footage right now coming from what appears to be cargo from a FedEx plane.
I would have sent it UPS, but hey.
No, well, so this is a real story.
I know it is.
FedEx has been working with the Chinese government going back to the 1990s.
To do this.
And in this specific case, they had animal care operators on the plane coming from China to the United States.
I would hope so. That's precious cargo.
These pandas are now going to be quarantined for a month.
Yeah.
Before they make an appearance at the National Zoo.
The
Panda Force One, I hear, is what they call it.
Is it really?
That's what I saw somewhere.
Are you making stuff up?
No, I mean, I think people were talking about it on Twitter. Oh, sorry. FreightWaves says it's the FedEx Panda Express.
Cute. I like Panda Force
According
One.
to FreightWaves.
TRIP is the culmination of an agreement signed by China and the United States. That was in April to bring the pandas back to Washington. The bear's predecessors, you might remember, we were all kind of super sad, departed last November despite U.S. efforts to negotiate a renewed deal to keep them in the nation's capital, hence panda diplomacy.
Excuse me, I said FedEx has been working with them since the 90s. It was the year 2000.
Can you get this right?
The year 2000 was the first time that they
long time.
transported giant pandas to and from China.
Yeah. A handful of U.S. zoos had also lost their pandas in recent years. Atlanta's 2 pandas went back to China over the weekend. San Diego got 2 new pandas earlier this year after a long lag. You might remember when it all started. Darn, they're cute. The U.S. was rewarded with its first pandas after President Nixon normalized ties with China back in 1972. Many other nations followed. In 1999, the Washington Zoo went without pandas for a year. My daughter was super into pandas.
Did you guys go?
We went to D.C. and saw pandas.
Did you go to D.C. just to see the pandas?
Just to see the pandas.
How old was she at the time?
She was probably 9 or 10.
So she loved them.
She loved them.
How can you not?
We bought a panda. She had a big panda too in her room.
You bought a panda, not a real panda. You did not get the Panda FedEx Express delivering
Did
to
I get a real
New Jersey.
one or a stuffed one? It was a stuffed one.
A stuffed one. We have a stuffed panda at home as well.
They're adorable. Although they look so cute, but man, they're pretty ferocious.
Are they?
Oh yeah. Like you don't want to tangle with a panda.
They are panda bears after all.
They look so cute. And there was tons of bamboo all around the Washington Zoo because they use that to feed them.
Oh, they're so cute.
Pretty cool stuff.
Very cool.
Panda diplomacy, it survives. So it's a good thing. What are you thinking?
I'm wondering about the future of NFL teams after they're getting some big investments from some private equity players.
Yeah, this is a story everybody's chasing now to see that, Tom Brady finally getting the okay, right, to buy his team.
Yeah, NFL owners
Not on
voted
his
to
own.
approve Tom Brady and Knighthead Capital Management co-founder Tom Wagner buying a 10% stake in the Las Vegas Raiders. The deal's been in the works since at least May of 2023.
Yeah, kind of interesting. Makes sense, right? Wanting to kind of keep his self involved in the game. And it does say that he is expected to have a significant role in decision-making around the team, according to those in the know. The Raiders have made the playoffs just twice in the last 14 years. The team currently sits at 2-4, on track to miss the playoffs again. So, might have to wait until next season.
Here's what's interesting. Brady's the only broadcaster who's also a part owner of an NFL club. So because of this, the league placed strict restrictions on him. He's not permitted to attend in-person or online production meetings, cannot have access to team facilities, places, or coaches. He cannot criticize officials or other clubs. What's the point of being an owner if you can't even go there?
Yeah, it can be like, those Raiders, man, they're really good.
Not allowed to.
Coaching, really good. Owners, really good.
That said, he is expected to have a, quote, significant role in decision-making around the team.
I said that.
Yeah.
Yeah, right? So important, I guess. I don't know. Interesting. Big money in sports. We've talked a lot about private equity, right, in terms of ownership in NFL teams. So, yeah, it'll be fun to watch this.
Which team would you buy?
You know,
The New Jerseys?
You know, I grew up watching going to the Giant game, so I'm probably partial to that. Yeah, I don't
Meadowlands.
know. What would you buy? Would you buy like your home team?
You know,
who was your home?
That's an interesting question. I grew up in a part of California that was basically equidistant from Los Angeles and San Francisco. There was no home team. I liked the Giants when I was younger. So
Did you
my dad
really?
would take me to games. The San Francisco Giants. Yeah, yeah. Didn't go